As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. Always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level.
DNB Finance Analytics is the new complete AI-driven credit-to-cash platform from Dun & Bradstreet. Its credit intelligence application helps to manage risk, increase operational efficiency, and enhance your business insight. What sets credit intelligence apart is the Dun & Bradstreet Data Cloud, the world's most comprehensive global business data and analytical insight. Our industry-leading scores and analytics are integrated into the workflows, providing unprecedented insight to help you better manage credit to cash. Credit Intelligence features 3 applications: Decision Maker, Account Manager, and Portfolio Insight, that together help you run a powerful, automated, and efficient credit department. With Decision Maker, you can automate credit decisions to quickly onboard customers and use the highly configurable online credit application to kick off credit requests. DNB Finance Analytics also includes the DNB Credit Check for Salesforce app, which allows sales teams to submit requests and receive instant decisions right in Salesforce. Account Manager makes it easy to expedite account reviews and better understand how to manage your aging receivables. And with Portfolio Insight, you can conduct advanced portfolio and account analysis to easily manage and monitor your global portfolio, including alerts. Credit Intelligence seamlessly integrates with Receivables Intelligence for a complete credit-to-cash solution that's flexible and easy to use. Ready to get started? Head over to our website to learn more. Risk is changing, and regulations are evolving with it. Compliance professionals need to stay ahead with greater third-party risk visibility and more robust due diligence processes. Meet DNB Risk Analytics Compliance Intelligence, a continuous KYC/KYB monitoring and compliance solution to help streamline due diligence, simplify decision-making, and increase defensibility. Powered by the Dun & Bradstreet Data Cloud, DNB Compliance Intelligence provides access to critical compliance risk insights on hundreds of millions of businesses across the globe. Quickly verify third parties, customers, and partners. Conduct enhanced screenings. Expedite risk analysis and decisioning with automation. Incorporate ESG and cyber risk into third-party compliance evaluations. Continuously monitor shifting compliance risk. And simplify compliance risk reporting. Incorporate and manage your third-party compliance policy within Compliance Intelligence to automatically monitor risks that are relevant to your company and automate decision-making. Verify third parties, customers, and partners fast with industry-leading firmographic, financial, and corporate linkage insights. Screen entities and individuals against sanctions, watch lists, politically exposed persons lists, and adverse media with speed and precision. Identify beneficial owners and ownership structures with interactive maps and help connect owners holding multiple roles to the source of wealth. Incorporate industry-leading environmental, social, and governance performance into third-party due diligence and keep up with emerging regulatory requirements. DNB Compliance Intelligence, a powerful tool to help you modernize compliance risk visibility, eliminate manual processes, and prepare your business for the future of compliance risk to come. Take the next step to a more defensible third-party compliance program today. Visit dnb.com/compliance-intelligence to learn more.
will eventually reach a cruising altitude of 35.
Ανάμεσα στην Ελλάδα και στον κόσμο υπάρχει ένα μέρος που κάποια στιγμή ίσως και να έχεις βρεθεί. Είτε κάπου για να πας, είτε για κάποιον που αγαπάς. Ένα μέρος που συνδέει την Ελλάδα με τον κόσμο με φροντίδα και ασφάλεια και αποτελεί βασικό πυλώνα ανάπτυξης του τουρισμού στη χώρα μας. Μια εταιρεία ευέλικτη και κερδοφόρα, έτοιμη να θέσει νέους στόχους και να ανταποκριθεί σε νέες προκλήσεις. Εδώ όλα γίνονται με σεβασμό στο περιβάλλον, με περισσότερες από
Held back by outdated and disparate technology, processes and service models, business leaders face a difficult choice: transform or be left behind. KPMG Powered Enterprise gives you a direct route to sustainable business transformation, starting with a model answer. The KPMG Target Operating Model is designed to help you achieve higher performance across 6 design layers. Pre-configured to work with your cloud platform of choice, the model provides instant access to thousands of leading practices and design considerations, with the journey to lasting transformation mapped for you via a matrix of maturity models that apply to every business function. Finance, HR, supply chain, IT, marketing, sales and service, and more. Built into the platform is powered technology with pre-configured process flows that facilitate data-driven decision-making and automation. So digital transformation can happen faster, smarter, and with greater certainty. To help upskill people for the future of work, there's also access to a comprehensive knowledge base, from libraries of leading practices and policies to functional roles and controls and risks and reports. To help you implement your company's target operating model, we use an iterative delivery methodology and tooling. Throughout the process, KPMG professionals work with you, helping to ensure that your application is configured for optimum take-up, adoption, and use. Once it's live, a key advantage of KPMG Powered Enterprise is Powered Evolution. This is an evergreen release model that keeps you current with leading practices and the latest software updates for your target operating model. Powered Evolution is provided by KPMG Managed Services, striving to ensure your organization is always moving forward with data-led insight, innovation, and agility. And where you need help to scale or further optimize your service delivery, KPMG's managed services can rapidly mobilize operations in a safe and controlled way. Now, there's no need to limit your organization's ambitions for growth locally, regionally, and globally. Faced with the choice to transform or be left behind, KPMG brings you a solution for outcome-driven functional transformation. KPMG Powered Enterprise, for businesses that belong in the future.
Facing new horizons can be a challenging journey. CRIF serves as your reliable compass, guiding you safely and effectively to your destination. As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. Always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level.
D&B Finance Analytics is the new complete AI-driven credit-to-cash platform from Dun & Bradstreet. Its credit intelligence application helps to manage risk, increase operational efficiency, and enhance your business insight. What sets credit intelligence apart is the Dun & Bradstreet Data Cloud, the world's most comprehensive global business data and analytical insight. Our industry-leading scores and analytics are integrated into the workflows, providing unprecedented insight to help you better manage credit to cash. Credit intelligence features 3 applications: Decision Maker, Account Manager, and Portfolio Insight, that together help you run a powerful, automated, and efficient credit department. With Decision Maker, you can automate credit decisions to quickly onboard customers and use the highly configurable online credit application to kick off credit requests. D&B Finance Analytics also includes the D&B Credit Check for Salesforce app, which allows sales teams to submit requests and receive instant decisions right in Salesforce. Account Manager makes it easy to expedite account reviews and better understand how to manage your aging receivables. And with Portfolio Insight, you can conduct advanced portfolio and account analysis to easily manage and monitor your global portfolio, including alerts. Credit intelligence seamlessly integrates with receivables intelligence for a complete credit-to-cash solution that's flexible and easy to use. Ready to get started? Head over to our website to learn more. Risk is changing, and regulations are evolving with it. Compliance professionals need to stay ahead with greater third-party risk visibility and more robust due diligence processes. Meet DNB Risk Analytics Compliance Intelligence, a continuous KYC/KYB monitoring and compliance solution to help streamline due diligence, simplify decision-making, and increase defensibility. Powered by the Dun & Bradstreet Data Cloud, DNB Compliance Intelligence provides access to critical compliance risk insights on hundreds of millions of businesses across the globe. Quickly verify third parties, customers, and partners. Conduct enhanced screenings. Expedite risk analysis and decisioning with automation. Incorporate ESG and cyber risk into third-party compliance evaluations. Continuously monitor shifting compliance risk. And simplify compliance risk reporting. Incorporate and manage your third-party compliance policy within Compliance Intelligence to automatically monitor risks that are relevant to your company and automate decision-making. Verify third parties, customers, and partners fast with industry-leading firmographic, financial, and corporate linkage insights. Screen entities and individuals against sanctions, watch lists, politically exposed persons lists, and adverse media with speed and precision. Identify beneficial owners and ownership structures with interactive maps and help connect owners holding multiple roles to the source of wealth. Incorporate industry-leading environmental, social, and governance performance into third-party due diligence and keep up with emerging regulatory requirements. DNB Compliance Intelligence, a powerful tool to help you modernize compliance risk visibility, eliminate manual processes, and prepare your business for the future of compliance risk to come. Take the next step to a more defensible third-party compliance program today. Visit dnb.com/compliance-intelligence to learn more.
Ανάμεσα στην Ελλάδα και στον κόσμο υπάρχει ένα μέρος που κάποια στιγμή ίσως και να έχεις βρεθεί. Είτε κάπου για να πας, είτε για κάποιον που αγαπάς. Ένα μέρος που συνδέει την Ελλάδα με τον κόσμο με φροντίδα και ασφάλεια και αποτελεί βασικό πυλώνα ανάπτυξης του τουρισμού στη χώρα μας. Μια εταιρεία ευέλικτη και κερδοφόρα, έτοιμη να θέσει νέους στόχους και να ανταποκριθεί σε νέες προκλήσεις. Εδώ όλα γίνονται με σεβασμό στο περιβάλλον, με περισσότερες από
Όταν τα έπιπλα μπάνιου είναι drop, θέλεις να τα χαίρεσαι ασταμάτητα. Drop, το καλύτερο κομμάτι του σπιτιού σου.
Facing new horizons can be a challenging journey. CRIF serves as your reliable compass, guiding you safely and effectively to your destination. As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. Always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level. Facing new horizons can be a challenging journey. CRIF serves as your reliable compass, guiding you safely and effectively to your destination. As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. Always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level.
DNB Finance Analytics is the new complete AI-driven credit-to-cash platform from Dun & Bradstreet. Its credit intelligence application helps to manage risk, increase operational efficiency, and enhance your business insight. What sets credit intelligence apart is the Dun & Bradstreet Data Cloud, the world's most comprehensive global business data and analytical insight. Our industry-leading scores and analytics are integrated into the workflows, providing unprecedented insight to help you better manage credit to cash. Credit intelligence features 3 applications: Decision Maker, Account Manager, and Portfolio Insight, that together help you run a powerful, automated, and efficient credit department. With Decision Maker, you can automate credit decisions to quickly onboard customers and use the highly configurable online credit application to kick off credit requests. D&B Finance Analytics also includes the D&B Credit Check for Salesforce app, which allows sales teams to submit requests and receive instant decisions right in Salesforce. Account Manager makes it easy to expedite account reviews and better understand how to manage your aging receivables. And with Portfolio Insight, you can conduct advanced portfolio and account analysis to easily manage and monitor your global portfolio, including alerts. Credit intelligence seamlessly integrates with receivables intelligence for a complete credit-to-cash solution that's flexible and easy to use. Ready to get started? Head over to our website to learn more. Risk is changing, and regulations are evolving with it. Compliance professionals need to stay ahead with greater third-party risk visibility and more robust due diligence processes. Meet D&B Risk Analytics Compliance Intelligence, a continuous KYC/KYB monitoring and compliance solution to help streamline due diligence, simplify decision-making, and increase defensibility. Powered by the Dun & Bradstreet Data Cloud, D&B Compliance Intelligence provides access to critical compliance risk insights on hundreds of millions of businesses across the globe. Quickly verify third parties, customers, and partners. Conduct enhanced screenings. Expedite risk analysis and decisioning with automation. Incorporate ESG and cyber risk into third-party compliance evaluations. Continuously monitor shifting compliance risk. And simplify compliance risk reporting. Incorporate and manage your third-party compliance policy within Compliance Intelligence to automatically monitor risks that are relevant to your company and automate decision-making. Verify third parties, customers, and partners fast with industry-leading firmographic, financial, and corporate linkage insights. Screen entities and individuals against sanctions, watch lists, politically exposed persons lists, and adverse media with speed and precision. Identify beneficial owners and ownership structures with interactive maps and help connect owners holding multiple roles to the source of wealth. Incorporate industry-leading environmental, social, and governance performance into third-party due diligence and keep up with emerging regulatory requirements. D&B Compliance Intelligence, a powerful tool to help you modernize compliance risk visibility, eliminate manual processes, and prepare your business for the future of compliance risk to come. Take the next step to a more defensible third-party compliance program today. Visit dnb.com/compliance-intelligence to learn more.
Facing new horizons can be a challenging journey. CRIF serves as your reliable compass, guiding you safely and effectively to your destination. As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. Always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level.
Καλημέρα σας, κυρίες και κύριοι.
Good morning, ladies and gentlemen. We welcome you to the 17th Credit and Risk Management Conference on ESG Impact on Credit Risk Navigating Through Challenges, which is organized, of course, by ICAP CRIF and is under the auspices of the Hellenic Banking Association as every year. It's an institution that involves all the crucial stakeholders in the credit risk management chain, and the current developments in the US show that Trump is about to win the elections, which forms a new reality for a global economy, and perhaps is the best juncture. There would be no better juncture than today to have this conference. The banks have entered a new cycle, expecting the new Fed move as a result of the election outcome, and it's both banks and businesses that done thousands of businesses that are judged non-bankable. It's a key issue, as well as the outcome of the 10-year financial crunch that has left all sorts of problems. In the 17th Credit Risk Management Conference, which is rather today, with the valuable contributions of our speakers, we're going to look into the challenges and developments in the credit risk management environment in a constantly changing climate where traditional methods are not enough, holistic strategies are selected, and as well as modern technology is selected by companies for sustainable development purposes. We'll also discuss the reasons why businesses globally are turned to environmental issues, as well as ESG issues, and how banks should support the efforts of the businesses offering sustainable financing. We'll also talk about AI, and specifically the changes brought about by Gen AI into the business model of companies, as well as internal processes regarding the improvement of products and the experience of customer experience. The 70th Credit Risk Management Conference is under the auspices of the Hellenic Banking Association. Before we start, we'd like to thank our sponsors. Our grand sponsor is Radius. Also, COFAS, the Athens International Airport, Impedus, Eurobank Greek Properties, KPMG, and our supporters are ABN Services, Drop Martinidis, Global Sat, Howden Lass, Intel Power, Spectrum Labs, and PTS ASA. Communication sponsors are Imirisia, Nafteboriki, Banks.com.gr, Energy, Game, Power Game, Dojiark, Hrima, and Hrima Week. If you want to connect to join the Wi-Fi of the hotel, follow the steps on the screen. And now, without further ado, I'd like to ask Mr. Nikitas Konstantelos, President and CEO of ICAP CRIF, to take the floor and address the conference, and to start the conference. You have the floor.
Good morning to all. I'm very happy to be welcoming you today to this event. We're expecting more than 250 people. It is our 17th conference, but what's important is that in these past 17 years, we have had 60 credit risk conference, and we demonstrate that we are the absolute leader and credit and thought leader in credit risk. 60 conference in Greece, Romania, Cyprus, and Serbia. For us, the magical number is 60 for this year. Let me get the clicker. And allow me to share my thoughts with you, because there's been developments in our company, as most of you know. So this year we celebrate 60 years. In the beginning as ICAP, in the past 2.5 years along with CRIF, because now we're a 100% subsidiary of CRIF, and we operate under the name ICAP CRIF. So we have 60 years presence in the Greek market, very successful presence in the Greek market, and we are a very important hub because we are in charge of the East European cluster. So 4 countries with physical presence: Greece, Romania, Bulgaria, and Cyprus, and we offer a large range of services, which is our classic services, business information, business solutions offered through our credit agency. We are the only credit agency in Greece. Marketing and sales solutions, and we offer technology solutions and advanced analytics. And obviously, we offer consulting services. Just a couple things about our CRA, because this is what gives us offers us the institutional role that we have in the Greek business community. Since 2011, we are the only company that has been certified by ESMA, the European Security and Markets Authority, as a credit rating agency. And since 2008, we have been recognized and are certified by the Bank of Greece have an external credit rating organization. This is a great recognition. We are, without exaggeration, the Moody's of Greece, and we offer a lot to the Greek system. Just a couple of things about CRIF. We are part of a CRIF group. CRIF is a global leader in the business, in the industry, specializes in business intelligence and with credit bureaus, is very strong in analytics and offering various open banking solutions. Just a look at the figures of CRIF. We see that we have presence in more than 35 countries in 4 continents, 604,000 professionals across the world. The customer base of the company is impressive, very strong in banking sector with more than 10,500 banks, very strong in insurance companies, 600 insurance companies, and 90,000 companies across all industries, and 1 million consumer clients. And you see the growth in the revenues starting in 2011, 260 million. And you see that in 2023 it was 800, and in 2024 we hope more than 900, and hope that 25-26 will have will exceed, our revenues will exceed 1 billion. Having said that, let me just say that now with CRIF we can offer additional services, more advanced services on 3 pillars: digital transformation. We have digital onboarding, KYC services, AML services, and open banking. On the customer credit journey, we offer loan origination system, customer management and decision making, and there's a lot of analytics on the regulatory side. Basel II, Basel III, of course, and ESG solutions on emissions, early working system, IFRS 9, etc. Now, let me move on, because our conference today will discuss the effects of ESG on businesses and on the times. We know that developments are very rapid everywhere. If we look at things from the perspective of big companies and SMEs, for large businesses there are new regulations in place. Let me put a note here and say that we all understand and we all want companies to show a good face on ESG. It's very good for many reasons, actual reasons, but apart from that, it is now a regulatory information. We are forced to take such action. So we see that the European Parliament has accepted the CSRD roadmap, which at first was voluntary, but starting 2024 it is a mandatory roadmap for big businesses in Europe, and compliance with ESG regulations grew from being necessary for a company to being necessary for the entire supply chain. Now, talking about SMEs, the majority of companies in Greece, and all these are suppliers of the big businesses, and they are included in the regulation starting 2024. And now, since banks are advancing sustainable financing, these companies have to be compliant with ESG rules in order to get financing under good terms. We help the Greek business community and global business community because we participate in Synergy. It is a CRIF platform across the entire world for which assesses the degree of company sustainability and certifies their compliance to the ESG criteria. This platform, let me give you a couple of figures on that, because this is a very important development. It's present in 4 continents, 90 countries, has been translated in 25 languages, 25 partnership with major organizations. more than 566,000 companies have joined the platform, and many companies have uploaded their portfolio on the platform. What are the outcomes of the platform? It generates an ESG score. It calculates the carbon footprint. It issues certificates, and it gives you an action plan to improve your performance as a company. And of course, the benefits go without saying. There's compliance with the regulations, there's transparency, and traceability of the supply chain, improvement of corporate reputation, and this leads to increased profitability. We're happy to see that this has been embraced by companies in the Greek market, and we have many companies in the Greek market, part of Synergy, and we want more to join. Let me give you some figures from our database which shows the path of Greek companies, and we do it every year to see where we stand. We see here how turnover grew from 2019 to 2022. 38,000 companies in Greece had a turnover of 173 billion in 2018. There was a slight increase in 2019, and obviously with the coronavirus in 2020 there was a drop of 12%, but we see that 2021 there was a dynamic rebound with a 20% increase. And was in a surprising 33% increase in 2022, reaching up to 256 billion. So 21 and 22 were very good, very strong years for Greek businesses. If we take a look at profits, based on 2018, based on the turnover, the profit before taxes, there was a drop of 4% from 2018 to 2019. There was a considerable drop in profit in 2020 due to coronavirus, but then there was the profit skyrocketed by 243% at 13 billion. An excellent performance in 2022 with a 43% increase at 19 billion. We see here the progress from 2018 to 2022. Let's take a closer look at 2023. Let's say that 2023, that a sample of 18,000 companies, including the largest ones, let's say that 2023 does not seem to be an excellent year, but we see a drop in the turnover of approximately 6%. We see a drop of 7% in profit before tax, and we see an increase in EBITDA by 7%. When we talk about corporate, we talk all companies, all industry except finance. Finance is something we monitor separately. The finance industry had considerable growth in 2023. You see, from 7 billion, the 20 banks operating the Greek market went from 7 billion in 2022 to 19 billion with 92% increase, and profit before tax from 4.2 to 5 billion, 18% increase. This is an encouraging picture for the banking sector. We all know that 2024 is even better for banks, and we believe that this is the driver that will boost the entire economy. Let's talk about 2024. We don't have a lot of data yet for 2024, but through the statistical agency we get information that all the companies have an increase of 5.2% for the turnover of Greek businesses. the listed companies, from a sample of 46 companies, listed companies, we see that the increase is approximately 2.2%, and that was the turnover. With regard to net profit before tax, the increase is 1.9%. So we see that 2024 has a positive trend, but with lower figures. To conclude, let me show you 3 slides where we see how Greek companies are going through the ratings we offer to companies. This, this is a table that we see that from 2011 we've rated 5,700 companies. We see the bars here. Blue color are ratings 31 December 2022. Orange is ratings 31 December 2021. Dark blue is 22, green 2023, and another blue is rating October 2024. It's a 10-point scale from 3A, which is excellent, to D, which is high-risk companies. We see here the progress. We see how it's going. We see the reduction in high-risk companies. Now, this is better described in this slide. We see that we see the separation between low risk, medium risk, and high risk. I've chosen 3 years. 2014 was deep in the crisis. 2020 and 2024 this year. We see that the companies that were low risk in 2024, that was just 9% of the companies. In 2020, this shot up to 18%, and now 35% of companies are low risk companies. That's a considerable development, and many more companies get good ratings. Medium-sized companies, there were 26% in 2024, 46% in 2020, and 54% today. And of course, the category that is of interest to all to see who we work with, the companies that were high risk, were 65% of companies were high risk in 2014, 36% in 2020, and 11% today. Huge progress. And I'm going to conclude with a slide discussing the probability of default of a company defaulting or bankrupting. You see here that from 2017, which the PD was close to 6%, the chance of a company to go bankrupt in a year or not be able to pay. We see that the PD is constantly dropping and has dropped down to 1%, and we forecast that this downward trend will continue in 2025. So I gave you an idea of how the Greek companies are doing. They're doing better, obviously, and with the slides that I showed you for the ratings, we see truly considerable improvement. This does not mean that there are no longer companies with problems, but we must always better assess things, be prudent on these issues, and get professional advice on how to move forward. This was my introductory remarks. Thank you very much, and I wish you a very good day. I believe that we have a wonderful program, and you will enjoy yourselves in the conference. Thank you very much.
Ευχαριστούμε πολύ τον κύριο Κωνσταντέλο.
We thank Mr. Konstantelos for the very interesting information he has shared with us. ESG is the major challenge for the immediate future. So at this point, I'd like to ask Mr. Konstantinos Logothetis, General Manager and Head of Credit Risk Management at Piraeus Bank, who is going to talk about the bank's strategies on risk management amidst economic stability. You have the floor. Thank you, Yanis. Good morning. So, good morning, dear Nikitas. Thank you for inviting me to the 17th ICAP GRIF conference. We're going to talk about credit risk management in times of continuous economic instability. There's a problem with changing the slides. Can someone help, perhaps?
Αλλά να το αφήσω εδώ καθεδρία.
Ναι. Ίσως από εδώ.
Είμαστε πιο σίγουροι.
Ναι. Έλατε.
Ναι.
Επόμενο slide. Το προηγούμενο.
Για δέκτη δοκιμάστε. Ωραία.
Να έχετε κάποιο animation προφανώς.
Εντάξει.
Επόμενο και προηγούμενο.
Ωραία.
Ή αν δυσκολευτείτε από τα βελάκια.
Εντάξει. Ευχαριστώ πολύ. Λοιπόν, ξεκινώ.
So starting with economic stability, which seems to be the only constant, and has been the only constant in recent years, at global and Greek level, there have been stability incidents with cumulative effect, major cumulative effect. In 2008, we had the financial crisis, where changes in the regulatory framework and the accounting standards. In 2010, we had Greece requiring the aid or support of IMF. In 2015, capital controls. In 2020, we had the COVID-19 pandemic with 9 lockdowns and total freezing of business activity. We had the moratoria and easing of financing, and we had all sorts of aid packages by states to boost the economic activity. And in 2008, we had changes in the supply chains and then high price hikes. And of course, the central banks know to deal with all this. They've increased interest rates, hence the servicing cost, the loan servicing costs. Then we have the Ukraine war, the war in Ukraine, new price rises in energy and foodstuff, and then the war in Israel, which among other things increases ship voyages, the routes rather, causing delays in the supply chain. Increases in fares, hence further price increases. And among all these, we have natural disasters, wildfires in roads, and of course, the floods caused by the Daniel storm in Thessaly region, where we also had victims. So though these incidents are not connected between them, they interact and worsen instability and don't allow businesses, banks and countries to fully recover from the previous crisis. So all these in crisis increase economic instability, and this in turn increases the credit risk. So what is credit risk? Is the potential loss arising from borrowers failing to meet its obligation according with the agreed terms, such as loan servicing. So we see expected credit loss, which is a product of 3 factors. We have exposure at default. We have got the probability of default, which is reflected in the rating, as we saw earlier by Mr. Costello. Of course, LGD, which has a lot of factors, including that the borrower becomes current again and getting financing. Another critical issue, of course, is stage, according to IFRS 9. As you see here, the loans are split into 3 stages. Stage 3 equals NMPs, calling for the highest amount of provisions. Stage 1 is better quality, calling for lowest amount of provisions. And then stage 2, which are PEs that have suffered or rather whose credit risk has increased since the initial identification. How are we helped by these stages? The allocation of the bank's portfolio risk system reflects its health, if it has been affected, in other words, by economic stability or not, and if yes, how? So what is the allocation of a system in stages that has not overcome the crisis, and what is that of a healthy system? What we see here is the allocation in stages of the Greek banking system and the European. Two different moments in time, 2019 and 2024. As you see in the first part, 2019, the Greek banking system, the red part pertains to stage 3 loans, so NPEs, which equals the green, stage 1. Next, in Europe, things were totally different. Green part, stage 1 loans, good quality loans, reached almost 90%. If we move to 2024 now, we will see that all these crises that we have discussed, like interest rate increases and the war in Ukraine, have affected the stage 2 loans in Europe. Here in the first chart, 7%, second chart, 9.5 actually. So the crisis has affected the quality of the bank assets in Europe, which we don't see in Greece, of course, which is its banking system is following an upward trend, reaching or attaining the EU averages. But how can we, being in a healthy condition, simulate a situation of instability like the first bar, so an increase in the other stages, and see how much we can, how resilient we are? We need to look into different scenarios for this reason, in extreme scenarios that would allow the embedding of this integration, rather, of this instability into our strategies. This will allow for a better business planning and will offer flexibility at times of crisis. So the management having a toolbox, a set of actions to take in order to deal successfully with any adverse development. So we need financial scenarios that will put stress on various parameters like real GDP or non-residential real estate and residential real estate. And will all these affect the outcomes in different scenarios? What you see here is a hypothetical scenario regarding the growth rate development in the Greek economy. In the middle, you have the baseline scenario, blue line, and the other two, the optimistic and the pessimistic scenarios. The further away we move from the baseline towards the adverse scenario, we have increased in credit losses. We can run probability-weighted scenarios such as FRS 9, so 60% probability, and the adverse scenario 2% in the other 20% in the other two, so as to have a single estimate that will take into account all the possibilities. But we can also stress the strength of the organization, testing only adverse scenarios as these ones, lower right corner. How can we identify early enough that such an adverse scenario is underway? Because nobody likes unpleasant surprises. A timely identification of the next crisis, and especially the effects of this crisis, is decisive because it allows the management to have the time to react. The support of early identification of risk presupposes an early warning system. And technology and information have a key role to play. We have to utilize all data and information available either on our systems or on the internet. In the first example that you see here, the top example, every dot symbolizes a business customer, corporate customer, and every arrow, the transactions with all the other businesses. The larger the dot, the higher the exposure of default, and the larger the arrow, the more the transactions between the businesses. So they're independent as well. So when we identify default or any other incident that affects the credit risk, then we have to see whether this incident might infect the other customers, so the other dots in the chart. In the second example, we see the use of external sources of information. We need large volumes of data and some sort of AI, the natural language processing, and NLP, that can recognize human language. So, for instance, it can read the media, the online media globally, as well as the comments and feedback given by customers regarding the quality of products and the ratings. The quality of products and services they received, so they can identify something adverse and can warn about a potential default before it actually occurs. Having seen how we can identify credit risk at times of instability and uncertainty, let's see what could be the source that will introduce new uncertainty and instability into the economy in the future. We asked ChatGPT, using all the big data available on the internet, to predict for us what the next crisis might be that will affect or intensify global economic instability. And the answer was that it's challenging to predict the next crisis, but they gave the following answers: trade wars and geopolitical tensions, food and water security crisis, cybersecurity threats, debt crisis, energy crisis, and climate change disasters, climate change. I will continue my presentation regarding climate change because of its weight and its significance, as we saw with the Daniel floods, Daniel storm in Greece, and recently Valencia. We'll start by saying that climate change is part of the ESG. G stands for governance. It has to do with the logistics and procedures regarding the operation of the company, like risk management, board of directors, all sorts of policies and directives regarding remuneration of management, etc. S stands for social, regarding considerations of humans and dependencies regarding inclusion, workplace safety, human rights, data, mental health, child labor, supply chain, etc. And finally, environmental includes preservation of the natural world concerning factors like climate change, natural disasters, carbon emissions, water consumption, but mostly climate change. But before we move on to further analysis and models, I believe we should look into the question whether there is actually climate change or not. And if there is it something that will happen anyway, or is it due to human activity? Various international organizations have performed studies, relevant studies to answer this question. And if we chose NASA, if we Google NASA evidence for climate change, and you will see the link at the bottom of the slide, you will see that there is certain evidence that there is climate change, and that is due to human activity through the gas emissions like CO2. Earth has been through other climate changes, but the global warming is 10 times faster than the average warming in the past. So it is unprecedented warming rate, and human activity is the key cause. So let's see what climate risk is, and to what extent we can reverse the rate of this change, as we saw it earlier. So the climate risk for borrowers is split into two: the transition risks and the physical risks. Starting with the physical risks at the bottom of the screen, which are associated with climate change the most and have to do with acute extreme weather phenomena, heat waves, storms, tornadoes that can destroy the production facilities of a plant or upset the production procedure. And B, chronic physical risks that are due to the long-term climate change, like it's warming, the sea level rise, decreased availability of potable water, etc., and fresh water, etc. And then we have the transition risks. So the risks of the borrower that arise from the transition to a greener economy with low carbon emissions. These include policy risks, new policies regarding energy efficiency, which would increase the cost of construction. We have got the legal risks, for instance, the fine that a company should pay if they fail to abide by specific regulations. We have got the introduction of new technology causing risks in replacement of former technologies that were harmful to the environment, such as e-mobility. We've got the market risks, such as the change in the preferences of consumers. And of course, they've got the reputational risk, for instance, the attraction and retention of customers, and earning customers from companies that have got a reputation. So these are risks of sources of credit risk. But how can we measure this, and how can we introduce this into our estimates about the expected credit losses, CA? So this can be done through scenarios. Who runs such scenarios? In this example, we have got IPC scenarios, the Intergovernmental Climate Change Committee, the UN committee, and of course the Global Meteorological Organization. They create the RCP scenarios that are used in intergovernmental meetings. RCP stands for Representative Concentration Pathways, which have to do with the greenhouse gas emissions. RCP2, as you see here, is the most ambitious and optimistic scenario. It presupposes rigorous measures to limit emissions, aims at maintaining the global warming below 2 degrees Celsius. So every scenario is linked to different increases in the temperature by 2100. In this scenario, 8.5. This is a pessimistic scenario, where not enough measures are taken to contain the emissions, and we have got a high rate of gas emissions, leading to a temperature rise by over 4 degrees Celsius with disastrous repercussions for the climate. Of course, there's a 4.5 scenario in the middle with moderate interventions regarding the emissions. And what does the graph shows? In order to maintain the risks as low as possible down to 2.6 scenario, we have to move to fast adaptation with a higher transition risk, of course. And in exchange for lower physical risk, less natural disasters. The opposite stands for 8.5. So the higher the emissions, the higher the temperature rise, the more the natural disasters. The lower the emissions through interventions for the transition to a green economy, we have reduced natural disasters but increased transition cost. All this will be discussed later, I suppose, as well. Depending on the scenario, we'll have different losses, different costs for businesses, and different costs will bring about different, will induce different credit risks for the individual sectors and industries. Concluding, we're going to say we saw how we measure credit risk and how through different scenarios we can integrate the economic instability into the estimates for expected credit losses, therefore help the management prepare for the next crisis. We looked into the climate risks and how they can be the new or the next source of instability for the economy. We looked into the alternative scenarios that one can use in order to integrate climate risk into ECL. But how good are these estimates? There are a lot of challenges ahead. First of all, data. The lack of histories of data is not very helpful, and also the horizon is not long term. It can only be until 2100. Then we have the regulatory framework, where we have institutions and companies like ICAP that can play can be very helpful. We also have the issue of overlays that can be the verification of overlays, which can be very useful. Then the regulatory framework, which is expected to impose a more structured approach, and disclosure and reporting requirements will increase. We can also use stage transfers, transfer stage 2 in specific regions that have been affected by floods or wildfires. This is what we did for specific groups of borrowers during the pandemic. Then we have the protection risk. Of course, risk insurance against coverage against natural disasters is critical and has helped during the Daniel floods. Although we had default events, insurance companies helped businesses and they recovered. So although we had a default event, credit losses were limited, were few actually, or for a short period of time, because customers or borrowers recovered and became current once again. Then have investments in IT will be required to collect the necessary information to build the models. The focus is on SMEs because large corporates already have taken strides in ESG, and all these have to be focused on maintaining the competitiveness of companies, and achieving this balance will not be easy. Thank you.
Ευχαριστούμε πολύ τον κύριο.
Thank you, Mr. Logothetis, for his very interesting presentation, and I think that in the current circumstance with the most likely election of Trump in the USA, all this talk requires greater interest now. We will continue with Mr. Gerasimos Zais, Managing Director at Radius Greece and Romania, who will discuss the international practice and the role of credit insurance. Mr. Zais, you have the floor. Thank you very much. Excellent. Thank you. Thank you very much for your introduction. Good morning to all. Good morning to all friends of ICAP Greece. I would like to thank the management for inviting us, for hosting us here, enabling us to have this wonderful talk. Dear Nikitas, I hope that you multiply your conference and you will celebrate another 60 years. So, today we're discussing about credit risk. Why is this the talk of the town? Why is credit risk management so topical today that we dedicate an entire conference to credit risk management? The answer is that precisely because we operate in a very complex, alternating and changing and occasionally dangerous commercial environment. Inflation has dropped in many countries, but is still high. Financing is still expensive, energy is still expensive. Consequently, the purchasing power of consumers is going down, and this inevitably leads us to an increase in bankruptcy rates globally. On the other hand, as we mentioned earlier, we have astonishing geopolitical changes. Commercial wars are at play, and they are expected to escalate in the future, and the planet's major economies, Germany, the engine of Europe, and China grow, but they do not grow as quickly as we were expecting them, and this affects the smaller economies. All these components make up one situation that leads us to an obvious for me conclusion that international economy has entered into a fragile balance. And for this very reason, credit risk management is more necessary and topical than ever. That is why we are here. With wearing my hat of a credit insurer, let me discuss one of those bullets much deeper, which is that of insolvencies, of defaults globally. Internationally, in the past few years, in most countries, insolvency rates have increased not only to pre-COVID levels, but even higher. In 2023, insolvency increased by 31% frequency-wise, and this trend continued and increased in the first half of 2024. And we all, as things are going, as we forecast in our traders, 2024 will have an increase by 2024 compared to 2023, and only in 2025 we'll have a stabilization of insolvency with a slight decline at the end of 2025. These figures shows the red bars are the percentage change from 23 to 24 in the largest economies around the world. We see countries like the US, Canada, Germany, Switzerland, the Netherlands with high insolvency percentages, and the gray is from 2024 to 2025, when, as I said, we expect a sort of stabilization. Our small darling Greece is not an exception to this rule. From 2021 to 2023 we had increased insolvencies by 26, almost 27% frequency wise, but 70% in multitude in terms of volume of amount. But as the figures show, for the first 8 months, 2024 will close with increased insolvencies by 28 and 30% in terms of frequency. Another favorite subject of discussion, topic of discussion, another component that is responsible for this fragile balance are the geopolitical threats and geopolitical developments. And I'm going to start not with the topical, but with the outsider, Russia and Ukraine. The war in Ukraine, which is still going on almost 3 years. In February it's going to be 3 years. The war is there, but we just don't see it in the news. The war is still waging. It's number 5 or number 6 subject on the news. But unfortunately, the war is still there, and it undermines and it affects inflation and energy. Another topical is that of the Middle East. A few weeks ago in a presentation, this photo only had 2 images, the flags of Palestine and Israel. Now we included the Lebanon and Iran. A few weeks we were all hoping, I hope these things will not escalate, Iran will not be involved. But unfortunately, this has escalated, and now we are in the midst of a system that each one is trying to resolve in any way they think with the relation back and forth, and this affects the economy because this is right on our doorstep. It is no accident that If you remember, a couple of weeks ago, when Hezbollah had a failed attempt to strike the summer home of Netanyahu, the oil prices spiked. And a few days later, when the religious leader of Iran decided and said that we're not going to have a full-blown retaliation, but we're going to have an average strike, the markets relaxed and oil prices went down. It is all this affects the economy. This situation there definitely affects all economies, and I don't know where this is headed. Another point which for me has always been very important for me, it's the holy grail of the chessboard, is Taiwan. This was and still is the power game between the US and China, the two largest economies on the planet. And there's always a risk there, a risk for expansion and spreading of economic wars. And the issue for this morning, the elections in the US, seems we do not have to say that, you know, one will do that and Trump will just stage a trade war with China or Korea. No, but already Biden has already imposed some tariffs to Chinese and Korean products. So, you know, all these policies, of course, the US will definitely affect our lives. Amidst this environment, this stability and fragile balance, there are numerous threats. But there are numerous opportunities as well. And one of the better tools that we can use in order to help our companies operate in this difficult environment and convert a threat into an opportunity is credit insurance. Credit insurance, for those who don't know, is insurance that covers customers in case the customer suffers a non-payment by the debtor to whom they have they have sold products or services on credit. And so they've given the products, they've offered the services, and the end client has not paid. So this is, we will pay when the supplier doesn't. So credit insurance helps because it has numerous benefits and advantages for businessmen, for the customers, for clients, will help companies to navigate these difficulties with success and gain a lot of benefits. Credit insurance is provided through credit limits that the insured asks for the beneficiary of the insurance, namely the client to whom they're going to sell. So they ask credit limits in order to get a coverage if the client fails. If somebody wants to sell to Kuzumjan SA, they're going to get a credit line from us. In order to do that, we need to check the company's credibility and credit rating. Is a good company. To answer this question, we have two channels of information. We collect information, financial information, balance sheet, financial process. We get this information from ICAP, CRIF, but we also get the market experience. How does that company pay you? What are the financial terms? You, not so well. Oh no, I'm not being paid. I have to try hard to get paid. So we combined all this information and we form an image, form a snapshot of that client, and we decide, and we will give the respective credit line to our client. This is done by professional underwriters who have a knowledge of the universe. They get information from all suppliers selling to that supplier, and not only the microcosm of that supplier, one-on-one. That's why we reach the first benefit of credit insurance is objective information. We offer objective information irrespective of whether I know them or not. We get information from 30 suppliers. So this is unbiased and objective credit opinion we can give, and we are liable for that. It's not a proposed line, And if the company goes bust, we will be responsible to pay for that. So when the debtor gets a credit line to insure the supplier, our job is not over there. This is where our job starts, because the company is entered into a database that we keep. We at Atradis, we have a database made out of more than 200 million clients globally. So this new client will go in there, and its credit rating is constantly upgraded using AI solutions. It's not possible to do that all the time manually, but we have some AI tool which scans the internet, and we collect real-time all the available information for this company and for all the companies in our database. So if you close your eyes and I ask you to visualize credit insurance as a heavy industry for updating information, that's a credit insurer. It constantly updates its information, and if through this process that this company or any other companies experiences problems and start not doing very well, has some problems, or their rating or their PD increases, then we will timely inform the supplier, the insured party, to reduce their exposure, namely not sell more to that company which, as it appears, might become insolvent, or if the situation is dramatic, take a step up and start selling to them. This, for me, is a great benefit of credit insurance, because it offers prevention, because we avert our insured to sell to that client which might become insolvent. A good insurer, as I always say, a good insurer does not indemnify, it averts the risk. Our role is primarily a consultancy role, but that's not our only role. Not because losses happen. Companies do go bust. As we said earlier, we have insolvency, numerous insolvencies, due to many reasons, extrovert reasons. We cannot avert losses. In this case, credit insurance offers the obvious benefit to clients, which is indemnification. We indemnify either when the client goes bust, this is insolvency, or if 6 months lapse from the original payment date, whichever comes first. In any case, we, the credit insurer, we take it upon ourselves to then claim the amount back from the debtor on behalf of the supplier, wherever they are on the planet. In some cases at our own cost. So the insured doesn't care if they've sold to a supermarket in Bahrain and they can't find a lawyer speaking Arabic and be reliable. They can't do that, but we can. We take it upon ourselves to go after the debtor, and irrespective of whether good or successful or unsuccessful, we will indemnify maximum 6 months no matter what. So the insured knows when they will get their money. And credit insurance is the only insurance product where the insured knows when they're going to get the money. To the day. They know that on the 5th of May 2025, I'm going to get 30,000 euros. So they put it down and they know this information for sure. Next is the tool helping our clients grow. It is a beneficial tool. It is a growth tool. Credit insurance is a growth tool, because when you feel safe and you're not scared of not collecting money from your clients, you can grow. You can go out to new markets, develop new relationships, and grow your client base without being afraid of how you're going to be paid, whether you're going to be paid, and whether you're attractive or not to your customer. You can be competitive, and if this sounds good for the private market, and in exports, this is particularly good, and it is beneficial, because when because credit insurers know other markets, not only domestic markets, because clients don't know the other markets. So that's why credit insurance is beneficial, because they can go out, they can go beyond the national borders and sell to other markets. So, but there is an issue. Do I have, that's all fine and well, but do I have money to wait for 2 months? Or, okay, you're going to pay me, but if I have to wait for 2 months, that's not necessarily good. I need capital, Mike, is where I'm going to get the money. When am I going to get it? But credit insurance does offer that. When you insure your credit, you safeguard your company from the possibility of suffering a fatal blow if your debtor goes bust. And anyone who insures a credit enjoys a better financial rate and by financing companies. And another thing is that when somebody insures their receivables, they can see them over to financing institutions and who will discard them, and so they can get cheaper working capital. Why cheaper? Because these companies, foreign houses, banks, and or funds, or a combination thereof, will get A-rated collaterals for these receivables, because Triadis is A-rated from Moody's, so the collaterals are going to get very strong, so the banks will feel safe and they will hand out lower interest rate for financing to their customers. Tradius has been in the market almost 27 years. In January 2025, we're going to celebrate our 27th year. And in the past few years, we've been the market leaders in the market with 50%. And in these last 10 years, we have made millions of euros in indemnities. And we have handled hundreds of losses. So let me give you a couple of tips that we've learned the hard way and we've become a bit more wise. And these are a couple of tips from what we've learned all these years by paying indemnities. One thing is that losses kill profit. They don't kill the top line, but the bottom line. So it's a mistake what the accountants used to say, that we have a 50,000 euro loss. We're going to get another 50,000 euro turnover and digest it. And if it's just 4% margin, the extra turnover that we need in order to digest it is the loss divided by profit margin, which is $1.25 million. This means that the thinner the profit margin or the higher the loss, then the more destructive is the impact on our books and our guts. And that's why we're saying that credit insurance safeguards, protects the company and the most crucial organ of an economic entity, which is liquidity, because companies die from loss of liquidity. A company will not go when we have low turnover or small capital. No, a company will die when it runs out of money. Finally, what we've seen, another tip is 1 out of 5 companies are fake. So a guy sets up a company, a fraudster sets up a company, pays in cash the first year, and well, everybody says, well, he's a good guy, he pays cash. Next year, he says, can I have 5 days? Okay, you give them payment terms of 10 days, and then 3 years later, everything is doing great. He has 1 month, 2 months credit terms, he's an excellent client. One Friday morning, that's it, the end. He disappears. And this cannot be avoided. No matter how well you know things, you cannot avert that. So that's where credit insurance is important, because it will absorb this kind of blows. So despite this, all this that we've described and all these negative situation, the frequency of increasing losses, there are many businesses that come to me and tell me, Mikey, I don't need to do credit insurance because I know my client, and they all use the same arguments. I don't need you to tell me about my clients. I know my clients. I know my buyers for many years. You know, I have a friend who has a friend in the bank, and I get all the tips from there. You know, Mike, I know everything. Or another argument. If my buyer goes bust, everyone will go bust because he's too big to fail. With all due respect, I'm going to tell you how I feel after 27 years. When I hear these kinds of evidence, or when I hear these arguments, this does not affect us because we've seen astonishing companies that went bust. Because it was not just too big to fail, there was blessing to sell to these companies, but these companies went bust. But it was not the end of the world. But those who had credit insurers were not affected. The last part of my presentation, ESG, which is a major part of our discussion today. I confess that a few years ago when we had ESG, we were thinking, okay, not now, I'm busy. But in due course, we saw that this is not just a nice-to-have KPI, but it's a must-have precondition. But why is this so? When I was a kid, this was the definition of climate change. That's what we thought about climate change. A few months ago, I saw a photo on the internet. That was the situation in the Arctic Circle. Polar bears just eating our garbage. This is just a few kilometers from the North Pole, and these wonderful mammals are eating our garbage. And if this has not affected you, this terrified me actually. And this is a graph that represents the financial losses in the US as a percentage of the US GDP for 1 degree increase of temperature on the planet, 1 degree Celsius, 2 degrees Celsius, etc. Hopefully not more. This is for the US, the largest economy on the planet. It has structures, it is prepared. It's not just for our beloved village called Greece. Last September, Daniel affected the region of Thessaly here in Greece. There were great floods, huge losses, 2.2 billion worth of losses that the state had to pay. Only 326 million was insured. 2.2 billion was the assessment of the entire losses. And this year we saw what happened in Valencia with more than 220 fatalities and incalculable losses. One might say that if a coastal city sinks, Makis, are you going to pay for that? No, I'm a credit insurance, I don't care. Will you pay if half the forest in Greece burn and the company surrounding them? No, I'm not going to pay anything. I'm a credit insurance. So, what do you care, Makis? Well, we care. We care because if all this happen, then this is going to affect the economy all around. Some people won't be able to sell, won't be able to export, salaries will go down, purchasing power will be compressed, it will lead to non-payments, will lead to defaults. So we do care, and we at Atreides have decided to do something about it. We've already integrated ESG criteria in our decision-making processes and in the policy underwriting. So we give higher rates to companies that do not meet the criteria, and we offer lower limits at the limit underwriting to companies that do not meet the criteria. We have promised our stakeholders, reinsurers, rating agencies, and other stakeholders that by 2035 we will have withdrew from thermal coal, other fossil fuel related risk, and so as to affect global trade in this direction. And since we lead by example, we have issued a policy called Modular Planet. And this policy says that if our insured becomes registered to one of the UN organizations that supports the ESG and sustainability efforts, 1% of premiums that we will collect, we will pay it out to that organization. This 1% might sound limited, but if it's we have 2.2 billion, so 1% is a considerable amount. I've concluded my thoughts, but let me summarize by saying that indeed we live in a different condition, different situation. Everything moves quickly, but with the right tools, smart tools like credit insurance, will be able not only to survive, but to become triumphant and turn this threat into an opportunity. Thank you very much, and I will be happy to discuss with you during the break.
Ευχαριστούμε πολύ τον κύριο Μπέι.
We thank Mr. Bays for his very eloquent presentation regarding the role of insurance in risk management, and I believe that everything we heard has been very useful in times of economic uncertainty as the current ones. And I believe that at this time I would like to kindly ask Mr. Giorgio Constantino, Executive Director of Global Transformation Services GRIFT Group, to talk to us. And Mr. Constantino, you have the floor.
It's working? Okay. May I have the...
Yes, you can...
Okay, thank you very much. So, guys, thank you very much. I would like, first of all, to thank to Nikitas for the invitation. This is the 16 years for ICAP CRIF, and to me it is the seven. When I prepared the presentation, I saw that the first time I came here it was 2017, and before the COVID, and so this was really amazing to me, also before the merger with CRIF. And so many thanks. I have the opportunity to introduce the next section of ESG, and I will try to, let me say, give you some flavors about the extending the horizon of climate risk also to nature-related risk, something new on the ECB regulation. My presentation will go through three main points. The first one is climate risk and the sustainable finance challenges. Let me say, I'm a little bit bored about speaking about climate change because, let me say, we are facing a lot of tragedies in front of our eyes. But let me say, we need to start from that. And thank you for the insurance, because I think that we can also support the economy thanks to the credit insurance. I will give you three potential weapons and link with the risk management for the climate risk. And finally, we try to take some conclusions. Last year, on my behalf, Daniele Vergari showed to you these slides. And let's say I would like to show you again, because last year we showed the number of damages that also Mr. Mattis showed before. In Emilia-Romagna, Italy, about 9 billion of damages. In Greece, about more than 2 billion of damages. We are talking about billions, guys, billions. So billions are part of potentially part of a GDP. And also in Valsea country, this is another example in Romania. Unfortunately, we are talking about these kind of damages. And in 2024, when I was in Budapest for a conference like this with my global responsibility, I'm traveling a lot, and unfortunately I'm talking about climate change anytime. These were the status of Danubium, okay? This is the parliament of Danubium. This was the state of Czech Republic, where we are talking about a trial of backtesting of our indicators, and this is the tragedy of Valencia, and I don't want to spend any money, any word about that, because it's absolutely a tragedy. So now what the European Environmental Agency is going to do is to indicate, to analyze a trend. It started to analyze a trend between 1980 and 2023, and let's say in the last 40 years, we are talking about 740 billion of damages. But the very interesting thing is that we are concentrating the damages in the last 2 years, about 162 billions. Okay, it's amazing, this point. So the peak is the last 2-3 years. And the expectation is these severe events are expected to intensify in the next future. So, which are the potential ways to drive the transition? I asked to ChatGPT to give me, to provide me an image of the weapons. And the funny thing is that ChatGPT gave me the weapons in terms of ECB. I'm an endorser of that, because I think that ECB is, we are absolutely an over-regulated environment in Europe, for sure. But I think that in that case, ECB is supporting us and is supporting the business environment to try to drive the transition, and mainly with 3 kinds of risk assessments. The first one is the physical risk. I don't want to spend time on that, but I would like to focus on the impact on company losses, impact on the loss given default. If you are a risk manager, you know that loss given default is the best proxy of the expected loss in the case of probability of default of 1. The second one is transition risk, very crucial for company. I believe that companies should collaborate with banks to calculate the transition risk, because the transition risk is the way to calculate and to estimate the transition to a lower carbon economy. And this is crucial in terms of revenues, cost, investments. This is crucial to understand. Can we lend other money to those companies? Can we drive the transition to those companies? And the last thing that is quite new, because it's the 4th chapter of the taxonomy requirement by ECB, is the so-called double materiality. Each company is exploiting resources on one side, and each company is dependent on resources on the other side. This double materiality is the new wave. Guys, it's complicated, but I think that in Europe we are the best in terms, because I'm traveling also out of Europe. I have been in Taiwan, I have been in Singapore, but they see us as a potential benchmark to drive the transition for ESG. Let me show very, very briefly what does it mean for companies and banks, the physical risk. We calculated to some significant bank, this is an example, the impact to some exposure not exposed to flood risk, and the other exposed to flood risk. And the LGD rised by about 8.5%. The damages, the potential damages for companies, but also for individuals, are damages on buildings, you know, machinery, inventories, but also the business interruption. The key factor to analyze and to manage this is the so-called granularity, the single name assessment. As CRIF, we are working a lot on that, exploiting all our databases, and we are working to have a single address of the buildings, where are they located, in order to understand the specific impact of each kind of peril or of each kind of extreme event. An example that I showed also to the Banking Association of Cyprus in July, where I was invited, also thanks to our colleagues in Cyprus, it is the following. So it's very interesting to understand that it's crucial to understand not only where the apartment is and where the destination is, the touristic usage or the residential, but also the floor of the apartment. This is crucial, and with our data we are trying to do that, because let's say in the case ECB is asking to a capital requirement, we may have different, according to this kind of risks of collateral, we are able to show them that there is a potential not significant average annual losses for an apartment located at the 2nd floor, and the more potential average losses let me say, for the flooded in an apartment located between the ground and the second floor in terms of flooded. These are granularity, understanding exactly which might be the average loss. And I hope that we may collaborate with credit insurers. We are working with a vertical partner to try to understand and to try to estimate this kind of figures. The second point that I mentioned before is the transition risk. To me, the transition risk is the future also for the company. If I had a company, I spoke also with some entrepreneurs, I would like to understand how will be the impact on revenues to shift from the fossil to green energy sources. I also would like to know the potential impact on operating costs, that in terms of, let's say, I have to pay carbon cost, and finally, to drive the transition to a low carbon environment, which kind of investment I have to set. What we have done as CRIF is to calculate also the impact on credit metrics for banks, to understand all these kind of, let me say, tasks, which kind of effect it might have on the probability of default at first. And the interesting thing is that in the case of orderly transition, and so in immediate and gradual transition, so we are doing something as of now, the probability of default is consistently lower than in the case of, let me say, delayed transition. What does it mean, delayed transition? We will do all the activities at the end of the period of, asked by the Paris Agreement, so 2014, 2050. And the difference is about 177 basis points. It's very huge. So again here, for the physical risk, is, as you remember, a very strong link with the loss given default. For the transition risk, the exercise is to understand all the actions that the companies are taking in place, which kind of effect might have on the probability of default. The fourth very interesting, a little bit complicated kind of risk is the so-called nature-related risk, or so-called biodiversity. European Central Bank, to put in place the regulation on that, asked to itself four main questions. The first, are companies dependent to the ecosystem? What does it mean, dependent to the ecosystem? It means dependent to at least one natural sources. The answer was that 72% of the company are highly dependent to at least one ecosystem services, water, forest, and so far so forth. Are banks lending to this kind of companies? The answer was 75% of all banks are lending in a euro area to direct dependent, highly direct dependent companies. These kind of companies are, let me say, working in an environment that can have a sort of degradation, or can undermine the production. And so with the final effect on PD, and the answer also is yes, and so at the end, the European Central Bank want to understand this double materiality dependence, how this double materiality dependence is affecting potentially the economy in the next future. I try to show you a graph. Let me say, it's not a university lesson, this one, but let's say, I think that this is very interesting to understand what does it mean, the double materiality. There's the biodiversity ecosystem on one side, and there are the companies on the other side. The first point, it is that the biodiversity ecosystem, water, forest, any kind of biodiversity ecosystem, each company might depend on that. Think about an utility company. An utility company is depending on the water. So the electricity company are depending on the water. And so in that way, indirectly, because they depend on the water, they affect the physical risk indirectly. On the other side, if the electricity company, in the example before, is depending only on the water, is impacting on the water. And indirectly, this company should calculate how, let me say, to go through a low exploitation of the water in the future. And this is a transition risk. This might be quite complicated, but let me say, the point is that, as we saw before, about 75% of the company are dependent on at least one ecosystem, natural resources. And so if they are dependent, they impact. And so what ECB is asking to us, try to understand this kind of dependency and impact, and try to calculate the effect on physical risk and transition risk. Quite complicated, like every kind of exercises that ECB is asking to banks, but absolutely interesting, and it absolutely allows all the business environment to, let me say, to drive the transition. This is the examples that I told you before. This is a real case of a utility company located in northern and central Italy that is, let me say, has no pollution in terms of GHG, or it is within the target parameters, but it has a significant dependency on the production for the production of the electricity, and at the same time has a significant impact on water. This kind of analysis, the big banks in Europe are already starting up. We are working with some significant banks, one in particular, I cannot give you the name, and we are doing this kind of analysis in a wide level to understand which kind of sector are impacting by different kind of natural sources. These are kind of example. For example, agriculture, forestry, fishing are strongly dependent by the soil, by the water. Electricity, as I told you before, is strongly impacting the use of water. And on the other side, we understand the dependency. The previous slide, it was about the impact, and this one is the dependency. This is a wider analysis to understand then which kind of impact we may have to the credit parameters. Let me finally take some conclusions. The three weapons that I mentioned before are part of a very, very wide regulations, about 7 regulations, very complicated one. But the summary, to try to drive the transition for both either the companies and the banks, it is to have, for sure, a wide and consistent data lake. And this is one of the things that we are working a lot in terms of collecting qualitative data with the platform that Nikita showed before, but also with the data lake of KPIs directly calculated by the department that I have the privilege to manage, that are, let me say, the physical risk, the transition risk that I mentioned before in a very granular way. The second point, it is to be the granularity. I think that I tell this several times to Nikitas, we as a company with consultancy and by business information, we should provide a very, very, let me say, social support to the system as a whole. Because we have all the information, we know where the companies are, we know where the machineries are located, we know where the subsidiaries are. At the same time, we are working with the banks to develop the credit matrix and the physical and transition risk matrix that I mentioned before. And this, for us, is a competitive advantage. But let's say, as I said several times, also in Bulgaria and also in Romania, where we have this kind of network, I don't mind that we are doing as a CRIF or with the other business information company. The tragedy that we saw before is something social. And so we need absolutely to work together to put together our information to understand where the potentially, let me say, tragedy might occur and which kind of impacts might have, also for the government. And finally, you have to have solid and proven methodology. As of now, we are already working with some financial institutions and some banks, and we are being already, let me say, supervised by ECB. in several countries in Europe. These are, let me say, the numbers of evaluation that we are going to do about 80 financial institutions at about 4 million of evaluation around Europe. Also with some Greek banks, I don't want to mention because for the privacy, but we are also working with some Greek banks. Last year, I think that we closed this kind of ESG speech with the message of Andrea Enria. Andrea Enria is the deputy chair of ECB, and he told we need to know, we need to understand, we need to know to decide. Now I would like to conclude with the words of Frank Ederson. I have not the opportunity to meet him in person, but we have some kind of indirect exchange as a consultant because we are supporting many banks. And typically, he's saying, we are putting at risk a lot of money, okay? And so ECB is very, very closely monitor and the progress of bank on that. And unfortunately, but I think that sometimes we need to do that, unfortunately, they will use any kind of measures to try to, let me say, ensure a sound management, climate and environment risks. And I think that, as I told you before, we talked about weapons, we talked about risk management. This might be maybe one of the best way to drive that transition. Thank you.
Thank you very much. Ευχαριστούμε πολύ.
Thank you, Mr. Costantino. We are already in the second session of our conference, Integrating ESG and Climate Risk and Risk Management. Let's say that the integration of ESG factors and climate risk into the credit risk assessment model is imperative. Banks naturally play a crucial role in their adoption, improving access to and terms of financing, while companies are required to adapt to ESG criteria to have easier access to and better terms of financing. We heard Mr. Constantino's presentation. I'm just going to note one graph on how losses increase dramatically in recent years, the climate change losses. And to close the first session, before we go to the first break, I would now like to call Mr. Michalis Harlambidis to the floor. He is the Chief Risk Officer of the Hellenic Financial Stability Fund, who's going to discuss the role of the role in managing the risk. Good afternoon, ladies and gentlemen. I, in turn, would like to thank Nikitas Konstantelos and ICAP CRIF for extending this invitation to me to talk to this very interesting conference. It's my presentations is rather technical. I'll try to be as simple as possible and try to be as brief as possible. I'm going to discuss about integrating climate environmental risk in banks' credit risk management framework. Let's talk about some definitions. Climate C&D risk concerns the impact of climate change on the economy, on society and the environment. They can be distinguished into physical risks and transition risks. Physical risks, in turn, are acute, which are extreme climate events that we all have experienced, and of course chronic risks, which concerns the incremental climate changes, the increasing temperature, sea level rises, drops, etc. On the other hand, we have the transition risk, which in essence concern how households and primarily businesses adapt to what we call the decarbonized economy, a society, a community without carbon. Of course, there are risks, there are transition risks, And the key drivers of these risks, as we'll see further down, there's the changes in government policies, European climate law, Greek climate law, legislation and regulation. ECB and SSM have imposed very strict guidelines to banks. Changes in investor and consumer sentiment, sensitivity on ESG criteria. We know that, we're experiencing that. And of course, changes in technology that are very important and affect us, EVs, AI, supercomputing, etc. Now, why is climate change crucial for Europe and Greece? And could it be that we're exaggerating at the end of the day? This is a graph from project team for ECB and ESRB on the climate risk, which very briefly, I'm not going to talk about the scenarios. Anyone who can double click the presentation and can see all the scenarios that are very technical. We see here the water stress. Greece is, you see that mostly South Europe is affected by water stress. And let me also show you the high position of Greece. And this is, we're talking about fires. This is a fire weather index. You can click and see greater details. We see that Greece ranks very high in both scenarios. With the orange and the blue lines, we rank very high. So this is the very, very major risk for us. And these are average number of draft dates. Greece ranks third. The top positions are always occupied by Mediterranean countries: Cyprus, Portugal, Greece, Spain, Italy. You see with how you see with the colors that South Europe has deep red colors. And I show you this graph because we need to understand that unless we do something to adjust to the transition, we're going to pay a very high price. And I think that Greece must do even more, because at the end of the day, it is more severely affected by all that we see around us. Now, let's see how C&E risk types and their drivers translate into the traditional business risk. We know credit risk, market, operational, liquidity. These are the traditional banking risks that the Greek banks have been dealing with in recent years. We see on the left the type of risks and their drivers, main drivers, and these in essence translate into the risks that we know through microeconomic and macroeconomic transmission mechanisms. Microeconomic are some for businesses, some from households. We see clearly that Storm Daniel hit and caused damage to properties and assets of households and businesses. In essence, this will directly affect credit risk and especially defaults and what we call the collateral value in loss given defaults. Properties were destroyed, income was eliminated, properties were eliminated, and the transition risk, we talked about capital expenditure. Businesses need to make considerable investments for research and development in order to be able to follow the transition plans. Macroeconomic now, we have productivity changes, socioeconomic changes, migration, wars, etc., and price changes, primarily through the cost of emissions. And all this converts into, in essence, the key business risk. Today we're going to focus on credit risk. We're not talking about the others, a huge matter to discuss all the risks. So, how do climate risks, in brief, affect the borrower's credit risks. When we rate the credit risk with banks in a traditional way, we see three dimensions. The client's cash flows, the income effect. We see their assets, a wealth effect, the equity capital of a business, for example, and we also see the type and value of the collateral. These are the three traditional dimensions that we use in evaluating credit risk. Climate risk, both physical and transition, you see how these affect the three key dimensions of assessing the credit risk. So it's become clear that we are now talking about a great impact on credit risk that we're going to see in the future, and this requires a lot of work in order to integrate all these things in our credit risk assessment methodology. Now, I'm trying here to give a slight example, an illustration, a theoretical example, because it's easy to show some things, but implementing is a different thing, and there's a lot of gaps in our situation. The first step one, is to define your climate transition scenarios. The climate transition scenario, in climate transition scenario, we cannot do whatever we want. Not everyone will do whatever they want. These are ready. They have been determined by scientific forum, and they must meet specific conditions in order to be accepted by regulators. When we talk about banks, we talked about the risk drivers. We're going to see the pathway, the transition pathways under each scenario, and how technology, policies, investor sentiment and consumer sentiments affect the transition scenarios. Now, the transition scenario have not been developed to assess the credit rating of a creditor, but for other reasons, for policy making, for environmental purposes. Now, all these scenarios will need to be translated into risk factors. We need to see how they affect the key figures of a business. So we see here how each scenario impacts costs, direct and indirect costs, capex, logical, revenues, very important. So in essence, we need to see how this scenario are going to affect the key figures of businesses. So we need to build some financial statements, if you wish, to present the business's financial figures and see how they are affected by these transition scenarios. Now, once we do that, the third stage will be to generate the financial indicators. When we carry out a credit rating of business, we see debt to EBITDA, we see debt servicing ratios, we see leverage ratios, liquidity ratios. We look at various factors. So the next stage is to see how all these changes in the financials of companies affect the indicators that we use in our rating in order to get the PD. Proportionally, the work is still at a very early stage at LGD, especially in the banking sector, but proportionally we do work on LGD as well. We're making an approach to see the correlation of stage PDs from climate change with the LGDs, but we need a lot of work on that. But through this simple example, we get the scenario implied. So it's a PD, which in essence integrate the transition scenario towards a decarbonized economy. Now, this graph, I've taken this graph for the ECB, the occasional paper series. You see You see here 12 industries, 12 industries in the European economy. The black dot is the median PD for 2022. We got the compensation. We calculated the median PD for 2022. In essence, the colors provide the three scenarios: the accelerated transition, the late push, as we call it, that starts late, and the delayed transition. The accelerated transition is something that starts in 2023, and the transition is completed by 2030, and the target is being below 1.5 degrees increase by 2100. Late pushes, we start at 2025, again to end by 2030, so that the pathway will lead us again to 1.5 degrees increase by 2100, and the delayed transition starts in 2026, but then things get out of hand and we have a target of up to 2.5 degrees increase in 2100. That is this. You see here the differences. You see here, in essence, the large impact is in these cases seen in specific industries: manufacturing, quarrying, mining and quarrying, and electricity. These are the highest bars, and of course followed by transports and wholesale and retail. You see here that the not solid colors, the dotted colors, the orange gives us the median PD to 2030, the regular, and the dotted one gives us the stress scenario, the extreme scenario. You see that in manufacturing and in mining and quarrying, the extreme PDs might be 2 or 3 times higher. So here, this is a very important conclusion, especially if we take into account that, and we link that to Greece, is that manufacturing, in essence, if we take the 4 systemic banks, that's 65% of emissions. So manufacturing is something we need to look very carefully. If I remember correctly, I'm trying to find my notes, transport and wholesale and retail trade is lower, but manufacturing is very important, the most important factor that we should need to look into. Now, the main problems that banks are faced with, and seeing from the position I held and discussing with people who worked on this issue, I did understand that in essence there are major data availability issues. So we don't have historical data, we don't have granular data, as the previous speaker said. Well, in essence, taking us down to the business level or the property level and see specifically how resilient that is to the natural risk. An example, what you need to know is the energy efficiency certificates, which in essence, if I remember correctly, for Greece, according to data of the 4 system banks, only 5%. We only have actual data for 5%. The remaining 95% are functions and models. It's a huge issue. If I remember correctly, there are 4.5 million properties in Greece which, if I remember correctly, more than 60% of those are dated before 1980. So the investment required for innovations and energy upgrading and to issue the energy efficiency certificates requires some sort of cost. So one of the huge costs that is at play is the cost involved with issuing energy certificates for properties. Another issue is the methodologies, which especially in the LGD must be reformed, must change, and become better. Now, in-house capability, in-house expertise, we need people. We need to hire people. We need upskilling and reskilling. We need specialized people. Now, consultants can't do everything. There's a huge cost because right now banks use for many of their operations people from consulting firms because we don't have the necessary expertise. So the banks are now building their expertise. So they're making hirings and the required upskilling of credit officers, especially in order to be able to understand these things. It's difficult, and it's a difficult issue to approach. And in essence, the climate risk assessment needs to be fully integrated in the credit risk process. So banks will have to integrate that. There's been significant steps in recent years, but in essence, that's a major point. The third strategic consideration for banks right now is regulatory and supervisory pressure. Banks are central to global financial growth through the financing they offer to the economy. And in essence, banking supervisory authority, which are very active, especially in Europe, have introduced considerable guidelines and are working on these issues a lot. So there's considerable regulation from European banking authorities and ECB and SSM, and great pressure on the banks, which in essence will exert pressure on their own clients, on their own borrowers, so that business to do their transition, or they will help households to get their energy certificates or be insured for natural risks. Another very important thing is that at the end of 2024, in a month, climate and environmental risks will be integrated in the supervisory review and evaluation process. What is that? This is a process of evaluating supervisors regarding their risk management, their governance, and the risk of banks, and they do an internal. They have the supervisory authorities, SSM, have an internal scoring system, and depending on where you rank, they say, I'm going to introduce higher capital requirements for you. It's something very important. That's why banks want to avoid any increase in their capital requirements, which, as you understand, will affect their costs. Of course, the discussion at the SSM for direct capital requirements in Pillar 1, like credit risk, market risk, operating risk. These risks have direct capital requirements calculated according to Pillar 1 of the supervisory framework. There is a discussion now. It's a purely political issue because this will automatically cause great problems to banks. I don't think it will happen next year, but I believe this will happen if we want to have a rapid transition. There's going to be pressure through the banks to businesses. Banks will suffer some capital costs. They will relate over to some businesses at a higher rate so as to convince them to do this transition if they are lagging behind in their obligations. And then C and E risk must be embedded in the risk appetite and the capital allocation that banks have been doing with the risks that they have, and also go into the credit strategy of banks and see the new products. We've had the development of new products because this has a cost. It's good. It must happen, but there are opportunities. It's not just cost. There are opportunities to new banking products, and through changes, we see that young people have a tendency towards green products. As I see, I'm trying to be conscious of the time. Now, the financial stability funds in the past few years and through the stability report we issue, in essence, what we're trying to do is convince banks to follow, of course, best practices, but also start working together and share their know-how in order to be able to join forces to collect all the knowledge and get this the know-how from other financial institutions that have joined voluntarily. You see here these principles. There is no supervisory requirement. There is no demand. There's no requirement to join. This is this is things of self-regulation. These are some links here. Poseidon principles is how we're going to green the shipping. The banks that have great exposure in international shipping, they set a framework of how we're going to have green learning in shipping. Sustainable steel principles is for steel. The Equator principles is for project finance and large infrastructure projects. Net Zero Banking Alliance, we have, I think, two Greek systemic banks joining, if I remember correctly. And the green loan principles. All these are voluntary initiatives, which in essence, we see the largest banks of the world that that operate in these industries, and in essence, they set the lending principles that everyone must follow. This is so-called self-regulation. As regards the Engage for ESG project, it is a project that is funded by the European Union. It's a European data warehouse, and in essence, it has to do with the energy efficiency certificates, and in essence, has to do with the alignment of green mortgages and energy efficient home renovation loans, in order for homes to reach, if I remember correctly, grade C in 2033. And the Greek climate law has, if I remember correctly, has 8 grades, 8 energy efficiency grades or buildings. In essence, for property to be sold, transferred, or rented up to 2023, they need to meet a specific grade. You see the link here of this initiative, and this has to do with applying a single methodology of how a certificate is issued, so that in all countries, only EU countries, the same rules apply in issuing energy efficiency certificate. And second, create a database. It's a huge endeavor, which I believe will take more than 10 years to implement. So, thank you very much, and hopefully this was useful and I gave you some key insights.
Thank you very much. We thank Mr. Charalabidis from the Financial Stability Fund. And before we move to the next panel, we're going to listen to excellent insights regarding very interesting things. So now we're going to take a short break before that for a quarter of an hour, no more than 20 minutes. Please be back in no more than 20 minutes to listen to this interesting panel.
Παρακαλώ να είμαστε πίσω.
Facing new horizons can be a challenging journey. CRIF serves as your reliable compass, guiding you safely and effectively to your destination. As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. Always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level.
DNB Finance Analytics is the new complete AI-driven credit-to-cash platform from Dun & Bradstreet. Its credit intelligence application helps to manage risk, increase operational efficiency, and enhance your business insight. What sets credit intelligence apart is the Dun & Bradstreet Data Cloud, the world's most comprehensive global business data and analytical insight. Our industry-leading scores and analytics are integrated into the workflows, providing unprecedented insight to help you better manage credit to cash. Credit intelligence features 3 applications: Decision Maker, Account Manager, and Portfolio Insight, that together help you run a powerful, automated, and efficient credit department. With Decision Maker, you can automate credit decisions to quickly onboard customers and use the highly configurable online credit application to kick off credit requests. D&B Finance Analytics also includes the D&B Credit Check for Salesforce app, which allows sales teams to submit requests and receive instant decisions right in Salesforce. Account Manager makes it easy to expedite account reviews and better understand how to manage your aging receivables. And with Portfolio Insight, you can conduct advanced portfolio and account analysis to easily manage and monitor your global portfolio, including alerts. Credit intelligence seamlessly integrates with receivables intelligence for a complete credit-to-cash solution that's flexible and easy to use. Ready to get started? Head over to our website to learn more. Risk is changing, and regulations are evolving with it. Compliance professionals need to stay ahead with greater third-party risk visibility and more robust due diligence processes. Meet D&B Risk Analytics Compliance Intelligence, a continuous KYC/KYB monitoring and compliance solution to help streamline due diligence, simplify decision-making, and increase defensibility. Powered by the Dun & Bradstreet Data Cloud, D&B Compliance Intelligence provides access to critical compliance risk insights on hundreds of millions of businesses across the globe. Quickly verify third parties, customers, and partners. Conduct enhanced screenings. Expedite risk analysis and decisioning with automation. Incorporate ESG and cyber risk into third-party compliance evaluations. Continuously monitor shifting compliance risk. And simplify compliance risk reporting. Incorporate and manage your third-party compliance policy within Compliance Intelligence to automatically monitor risks that are relevant to your company and automate decision-making. Verify third parties, customers, and partners fast with industry-leading firmographic, financial, and corporate linkage insights. Screen entities and individuals against sanctions, watch lists, politically exposed persons lists, and adverse media with speed and precision. Identify beneficial owners and ownership structures with interactive maps and help connect owners holding multiple roles to the source of wealth. Incorporate industry-leading environmental, social, and governance performance into third-party due diligence and keep up with emerging regulatory requirements. D&B Compliance Intelligence, a powerful tool to help you modernize compliance risk visibility, eliminate manual processes, and prepare your business for the future of compliance risk to come. Take the next step to a more defensible third-party compliance program today. Visit dnb.com/compliance-intelligence to learn more.
will eventually reach a cruising altitude of 35.
Ανάμεσα στην Ελλάδα και στον κόσμο υπάρχει ένα μέρος που κάποια στιγμή ίσως και να έχεις βρεθεί. Είτε κάπου για να πας, είτε για κάποιον που αγαπάς. Ένα μέρος που συνδέει την Ελλάδα με τον κόσμο με φροντίδα και ασφάλεια και αποτελεί βασικό πυλώνα ανάπτυξης του τουρισμού στη χώρα μας. Μια εταιρεία ευέλικτη και κερδοφόρα, έτοιμη να θέσει νέους στόχους και να ανταποκριθεί σε νέες προκλήσεις. Εδώ όλα γίνονται με σεβασμό στο περιβάλλον, με περισσότερες από
Held back by outdated and disparate technology, processes and service models, business leaders face a difficult choice: transform or be left behind. KPMG Powered Enterprise gives you a direct route to sustainable business transformation, starting with a model answer. The KPMG Target Operating Model is designed to help you achieve higher performance across 6 design layers. Pre-configured to work with your cloud platform of choice, the model provides instant access to thousands of leading practices and design considerations, with the journey to lasting transformation mapped for you via a matrix of maturity models that apply to every business function. It's finance, HR, supply chain, IT, marketing, sales and service, and more. Built into the platform is powered technology with pre-configured process flows that facilitate data-driven decision-making and automation. So digital transformation can happen faster, smarter, and with greater certainty. To help upskill people for the future of work, there's also access to a comprehensive knowledge base, from libraries of leading practices and policies to functional roles and controls and risks and reports. To help you implement your company's target operating model, we use an iterative delivery methodology and tooling. Throughout the process, KPMG professionals work with you, helping to ensure that your application is configured for optimum take-up, adoption, and use. Once it's live, a key advantage of KPMG Powered Enterprise is Powered Evolution. This is an evergreen release model that keeps you current with leading practices and the latest software updates for your target operating model. Powered Evolution is provided by KPMG Managed Services, striving to ensure your organization is always moving forward with data-led insight, innovation, and agility. And where you need help to scale or further optimize your service delivery, KPMG's managed services can rapidly mobilize operations in a safe and controlled way. Now, there's no need to limit your organization's ambitions for growth locally, regionally, and globally. Faced with the choice to transform or be left behind, KPMG brings you a solution for outcome-driven functional transformation. KPMG Powered Enterprise, for businesses that belong in the future.
Facing new horizons can be a challenging journey. CRIF serves as your reliable compass, guiding you safely and effectively to your destination. As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. Always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level. Facing new horizons can be a challenging journey. CRIF serves as your reliable compass, guiding you safely and effectively to your destination. As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. Always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level.
Λοιπόν, επιστρέψα.
So we're all back after this short break, coffee break, and I'd like to tell you before we start our next panel, which will be very interesting, I'd like to say a few things because listening to the talks of Mr. Giorgio Costantino and Michalis Haralambidis, it's becoming increasingly clearer that the integration of ESG criteria helps the sustainability and development of companies. So CRIF, I have to tell you, invests in this new challenge and has created an ESG business database, global one, with the CNESG as the key access platform, allowing businesses to profoundly understand the ESG performance and the stability of their partners. On this slide, you see a very interesting correlation between ESG performance and the potential, the probability of failure or bankruptcy, confirming the strategic investment in ESG. You see the graph here, the chart here, how strongly correlated there is the failure risk with the ESG criteria and strategy. This is a very interesting piece of information on this slide. Please, this is a good takeaway. And now, without further ado, we can move on to our next panel. So I kindly ask my colleague, Theophani Zois, a journalist from Nafteboriki newspaper, who will facilitate the panel. And of course, Ms. Anna Vassila, Manager of Sustainability Industry Affairs of the Athens International Airport, Mr. Dimitris Kokovinos, Director of Climate, ESG and Enterprise Risk Management at Alpha Bank, Mr. Ioannis Petropoulos, Head of Risk Strategy and ESG Risks at Piraeus Bank, and Mr. Panagiotis Kiadas, Senior Sustainability Director at Viohalco.
Καλημέρα. Ευχαριστώ πάρα πολύ τον κύριο Φόσκολο για...
I thank Mr. Foskolos warmly for this introduction, and I'd like to immediately come to the point, starting by saying that the climate change threat, which is the transformation of companies globally, make this ICAP Congress more topical than ever. Entire cities and communities are destroyed by extreme weather phenomena, and the Valencia floods have scared us enough, all of us. Focusing on risk, the companies that are most exposed to climate risks must be flexible in dealing with the complexity of this threat, and I believe that we've got two key representatives of companies like Viohalco and the AIA, Athens International Airport, as well as our bankers who are going to take the floor a bit later and share their insights. And I'd like to say that managers, as our panelists here, must assess the risks that are associated with the climate in the areas where they operate or in the areas that they finance. The business community needs to adopt holistic strategies regarding sustainable development, following in accordance with the UN 17 SDGs and the standards of the EU regarding the ESG reports of companies. Let's not forget that the ESG-based evaluation of companies not only matter for credit institutions and potential investors, but also all of us as consumers. So since we're after holistic sustainability policies, everyone needs to implement responsible management. Starting with me, Anna Vassila, Manager, Sustainability and Industry Affairs Manager at the AIA. I'd like to ask her, given that the airport industry is one of the most vulnerable to climate risks, how ESG is integrated into the strategy of AIA, and what steps have been taken in order to reduce its environmental footprint, and what the key actions taken so far have been. Mrs. Vassila, you have the floor. Mr. Zois, dear colleagues, participants, thank you very much for giving me this opportunity to take part in this very interesting, I'm sure, discussion. Representing AIA, I'd like to say that since its inception to date, as a company, it has been consistently offering high standard services and has earned the trust of a series of stakeholders, as we call them in the ESG language, airline companies, passengers, partners, and shareholders. So AIA offers one of the most innovative and comprehensive incentive programs to airline companies worldwide, starting with the business aspect, ensuring the sustainability of traffic, and at the same time, we follow we monitor the Athens destination, Athens as a destination. We do everything in our power to promote the sustainable aspect of Athens through a set of initiatives. Since 2016, we've been the first zero CO2 neutral airport, and then we took the Route 2025 initiative, a commitment to achieving net zero carbon by 2025, well before the target for 2025 that has been set by the industry, our industry, and has been announced by the ACI Europe. In 2023, let me tell you that we upgraded our certification at 4+ level of the Airport Carbon Accreditation Program, of which we are proud founding members through our CEO, Mr. Paraschis, who has been the visionary mind behind this initiative. And for this certification, carbon emissions from other sources, from third sources, are also taken into account. We also have the first self-generation 60 megawatt capacity power plant within our fence, which covers 45% of the power consumption of the airport. We're going to add another solar park of 35.5 megawatts, hence maximizing our own generation through the storage capabilities, energy storage capabilities that we will develop in order to fully meet our energy needs through renewables. Also, having been acknowledged as the best airport in Europe regarding the service level, we continue our program for the constant upgrading of the venue, the facilities, and the project for the increase of the annual capacity is underway, focusing always on sustainability terms and conditions. We should not forget that the airport, just like other industries, but let me focus on my industry, is teamwork and is a chain, as we call it. We are involve 300 companies. It's a whole community with more than 26,000 employees and 16,000 employees. And therefore, we're one of the larger growth drivers in the country. And this, of course, creates a lot of responsibility for us regarding the way we operate and what we're going to hand down to next generations, which is actually the objective of the sustainability strategies implemented by companies today and in the immediate future. That's all I had to say. Now, regarding the environmental aspects, we will do it later on, if you don't mind. We will focus on the environmental aspect later on. Okay, thank you. Now, then I'd like us to talk about the challenges in air transport. So, let's come to land. And Mr. Panagiotis Kedas, who is the Senior Sustainability Director of Viohalco. And I'd like to ask him, the industry in which Viohalco operates is one of the highest energy-consuming industries. Which do you think are the most important risks related to climate change, and how do they affect your operation and future investments? First of all, I'd like to thank Mr. Konstantelos Naika for this invitation and for honoring me. with this invitation regarding the challenges of a metal mining and metal industry like the OHALCO, especially currently when we're at the beginning of the energy transition era, which is not only an energy transition, it is a total transformation of industry, because moving onward fast pace towards this much desired decarbonization means that we move towards a mineral-based industry where energy will rely on wind, solar, and other forms of energy that need many more minerals and metals. As you said, they have got a large energy footprint, as well as high carbon footprint. The highest challenge, the biggest rather challenge, as we saw in the previous presentations, which have to do with reducing risks and physical risks. The physical risks, I believe we all are aware of them, we know them, we experience them, and we believe that we will all experience them for a lot of time in the future, perhaps more often and more intensely. We can do a few things about those. We can do things against wildfires, for instance, in order to better protect our plants from wildfires that can reach our facilities. We can do things about floods, but we can't do much, but we're trying regarding other things, which is the highest risk that we want to face. And I'm saying this because it has got a short-term horizon. But if we look at the transition risks, I have to tell you that our worst worry is how the European Union policies, the climate change policies, create the conditions where we lose our competitiveness versus industries that operate outside Europe, and which have do not need to adopt the same policies, and perhaps we can discuss this later. There's a key issue of data comparability. Anyone can say, I use 100% recyclable materials, I use 100% renewables. We see this every day, you see. But we don't believe this information. Everybody has got their own definition, even in the minerals and mining industries. So currently we face a major risk from industries that don't need to move at the same fast pace towards energy transition. Energy transition is not only how much energy we generate, because we have no storage capabilities as yet. So all this needs to move at a slower rate so that so that the industry can remain competitive and be fully assimilated by industries and consumers, because all this is then rolled out to consumers, driving prices high. Now, regarding this, and because we talked about the European Union rules and regulations, considering that we will have a new government in the US as of next year, the new Trump administration, how do you think that the European Union should move to make the change that you need regarding policies? The US policies, this is something we'll have to wait and see. We'll have to wait and see how, especially the protective policies that might be implemented. I don't know to what extent the European Union could adopt such protective policies, but because protective policies might lead to high tariffs, and I don't know if the European Union can withstand this price hike that will be due to the new tariffs or protective policies. Europe hasn't adopted the tool of subsidies for the energy transition. I believe that we will closely monitor in the next 6 months what will happen in the US policy and how we're going to evolve. And as Europe, we have to keep our eyes open in order to make sure that we follow suit and make sure that we help the European economy. Okay, let's see what the banks will do. And let's move to Mr. Ioannis Petropoulos, representing Piraeus Bank. I'd like to ask, or rather I'd like to say that banks play a key part in leading businesses to more sustainable operation models. How do they support companies, the ESG criteria adjustment? Are there specific financing tools or advisory services that you deliver to your customers who want to integrate ESG into their strategy? Thank you very much, Mr. Zois. Good morning, everyone. I'd like to also thank the organizers for giving me this opportunity to take part in this panel and share views with the distinguished panelists. Indeed, banks in Europe are called to operate as catalysts, to act as catalysts in the transition of companies to more sustainable operating models. This role is very crucial, very critical today, as we are in an era where the pressure from banks and supervisory bodies has been increasing in order to integrate sustainability criteria into the strategy and the financing of banks. The aim is to create a banking system that will not only manage efficiently all these risks, but also turn them into opportunity, promoting the resilience to increasing social and environmental challenges. Now, how high on the agenda of the supervisory bodies this item is, it becomes clear with the full integration of ESG and climate risks into the annual supervisory evaluation of banks. Moreover, both the ECB and the European Commission in recent years have proceeded to various stress tests in order to verify the actual exposure of banks to climate risks. And the results of these tests show that the banks that have managed or have got a good plan to introduce ESG criteria into their strategies are better shielded against these risks. The same is true for their balance sheet and profits, and they're in a better position to finance their customers for their transition to a more sustainable economy. As you quite rightly said, the support of businesses can be achieved through financing instruments and advisory services. So both in Greece and Europe, we've seen a blooming in recent years regarding sustainability-linked loans, which are financing instruments that incentivize businesses to invest in sustainable practices. A good example are green loans, as we call them, or loans that include social indicators that give the opportunity to businesses that will achieve specific environmental, climate, or social or governance targets to have better pricing or more favorable conditions in their loans. Therefore, financing instruments are no longer merely a means to increase capital, but also they are also a driver of sustainable results. Now, coming to advisory services, and indeed a lot of banks have recently developed such services, trying to help their customers include ESG criteria into their strategy. These include the ESG risk analysis and assessment, as Mr. Skada said earlier, whereby banks help businesses map these climate and environmental risks, conveying or transferring know-how to them. and the development of transition plans, supporting businesses to implement more environmental friendly policies. A good example is the energization plans of customers so that they can adopt more environmental friendly forms of energy. And of course, the improvement of the energy efficiency of their facilities, their building facilities. Finally, concluding that, I'd like to stress that it's very important. The communication and training of customers is a key, because this is an objective in the role of banks as catalysts of the transition. This support is highly important in Greece, where the majority of Greek businesses are SMEs with limited resources, in-house resources, as well as experience and know-how as to how to integrate these criteria into the strategies and procedures. I thank Mr. Petropoulos, and now moving to Mr. Kokovinos, Director of Climate ESG Enterprise Risk Manager of Alpha Bank. Now, Mr. Kokovinos, what could be the key challenges faced by banks in implementing ESG criteria, and what are the benefits of adopting ESG? Well, thank you for businesses. Thank you very much for this invitation. Picking up from the previous speakers left off, and also based on the comments of Mr. Logothetis and Mr. Chralabidis earlier, I'd like to say that banks face challenges at two different levels. First of all, because they're businesses, and second, they face challenges because they are called to be harmonized with this regulatory framework that has upgraded the need for full harmonization with for 55 in the European Union, which requires emissions reduction within the European Union by 2050. So there are two levels of challenges for banks. Now, as financiers of the customers, banks need to evaluate or assess objectively the ESG footprint of the customers. This is the first challenge for us, because there is no single methodological framework. There are a lot of firms that evaluate companies in terms of their ESG characteristics. However, because of the lack of because of the polyphony that there is, or the diversity of regulatory frameworks in the European Union, every firm uses a standard that could be correct in terms of its implementation, but does not allow the proper comparability between the different types of evaluations of the various firms. Therefore, we as banks are often reading the ESG evaluation of a large customer of ours, corporate customer. We need to make comparisons and make decisions without having comparable results, which makes our everyday life difficult. There is a general need, because regulatory frameworks have been introduced and implemented starting from large companies with over 200 employees, with over 40 million turnover. So gradually, these will be cascaded down to smaller companies, and reaching all the way to what we call SMEs. Now, in our country, where the structure, or rather, In our country, where the SMEs are the dominant form of companies, things are very more difficult because we're talking about family businesses mostly, and they are difficult to adopt the ESG culture and change the way in which they work, in the which they operate, they do their business. And move towards a greener, let's say, direction. Now, if we look at situations that are not related to environment, but also social aspects, things become even harder because given the structure of the Greek economy, there is no easy harmonization of SMEs and very small companies, very small businesses of these changes. But there is also the issue of internal challenges faced by banks. Mr. Charalambidis said earlier that there is the intensifying regulatory pressure, as Mr. Petropoulos said as well, which calls for us to start operating in a different manner, and banks need to develop a skill set among their people beyond the traditional banking practices. We're not experts in climate, or we're not environmental engineers. Now, however, we need to find ways to introduce this know-how into our banks, into our organizations. For the time being, I believe we all use external consultants and experts, but this is a skill set that we need to gradually introduce into our banks, because what we call climate and environmental risk has come to stay. It's not something transient. And of course, we need to make adjustments, similar adjustments to systems, evaluation techniques and methods, internal procedures, and then this goes beyond traditional banking. The regulatory framework, although it started out with the CSR and was set up to create a good image of businesses to consumers and help consumers and the public to see what companies are aware of the environment and society. Social responsibility has gradually, through CSRV, has become increasingly demanding. The needs for disclosures on the part of the businesses are quite demanding. There is the ESG report that needs to be published by large companies, but gradually by 2028 it will have to be published by smaller companies as well. And all in all, we see that the European Union has a rather tight management framework for environmental and climate risks. And in essence, I think it's at the top of the agenda of the European Union. I think ChatGPT, it was mentioned by Mr. Logothetis, should have set climate change as the top risk and followed by the others. One final comment, because we've mostly talked about business aspects. There is also the aspect that has to do with the real estate market, commercial, residential real estate markets, which is another source of environmental risk for banks and the European Union in general. The building stock, the European building stock, is aged in dating back to the World War II. Mostly built in the 50s, 60s, and 70s with low energy efficiency criteria, and this costs the European Union. And another challenge here is that there is a European trend to subsidize home renovation schemes projects, excuse me, and this will be stepped up in the following year, in the next years, because the current building stock, unless it is improved in terms of energy efficiency, net zero cannot be achieved in the European area.
This is something that we'll discuss in the second round of questions, and now I will pass the floor again to the lady of our panel, Ms. Vassila. Let's discuss the challenges. Tell me, which do you believe will be the biggest challenges for air travel and airport industry in the period that's coming, and how do you prepare for the day after? Do you believe that airports are changing the way they operate? I wish we had a crystal ball to get this information from time to time and being able to predict the problems that will be faced. The impact we experienced with the COVID was huge for our industry, and we're still seeing market, fortunately not our own, we're seeing markets that are still trying to recover. But the good news for our industry is the experience of travel is something that cannot be replaced or substituted by anything else, and the challenges that were revealed by COVID, without undermining the other crises that we went through, the financial and the economic crisis and pandemic crisis recently in 2009, all this has revealed a new profile, the profile of the responsible traveler and the responsible stakeholder. The bank spoke earlier of a regulatory framework, and the European Commission that wants to be trailblazers in green transition. Addressing the risks for the competitive edges within the European continent and European Union specifically. As a company at the international airport, we are usually responding to challenges with bold vision. I spoke about 2025, and this is something that we announced in 2019. Then we had COVID, and this changed almost everything, but we haven't backed down of our schedule, of our designs. We are following our roadmaps. We are following our roadmaps, and we transform our visions into action. And I think that's the safest way for a company to move forward. As regards the industry overall, to address the challenges that are there, I will agree with what we had earlier. There's a polyphony, the alphabet soup. We don't have common definitions in terms of ESG. We don't know how we are rated by ESG raters, but it appears that response speed of legislation setters has improved, and companies are much more mature compared to a few years back. So we respond to challenges with synergies, with communication, and by placing consumers at the center of our efforts. We have open channels of communication with all stakeholders, because that's the only way we can listen and find out the problematic areas, prepare a strategy, and take action to respond. Through the recent coronavirus crisis led us to develop synergies, and we managed to be one of the top markets, one of the first markets that came back on track, and overall we helped the recovery of Greek tourism overall. Undoubtedly, innovation and its embedding innovation in the procedures followed by airports is a challenge. It is a challenge, definitely, that is there. It's something that we have identified, and we're trying to find a way to embed it within our everyday operation. Integrated energy management and the transition of airports, status of airports, as we call them in the industry, energy ports, energy hub. That is another challenge, and in Greece we need to take fast steps in the production of sustainable aviation fuels and selling sustainable aviation fuel, because there's already been a law on this, and there is a mandatory transition to sustainable aviation fuels. And undoubtedly, the new travel experience will have safety. Safety is a top priority for the industry. This will never change. Safety is there. But there will also be now sustainability in financial terms as well, and the SRD directive, which imposes large businesses and smaller businesses, as we've heard, the obligation to prepare and publish reports on the financial figures and sustainability. I think that the financial, non-financial figures term is very obsolete, so that's why I use sustainability figures. That's why the disclosure of data has a financial impact, because the investors are always watching. And in any case, the part that nobody overlook is the human factor, the human element. People as employees, people as travelers, because the skill set as regard sustainability and ESG is not out there, cannot be found out there, not only in Greece, but in Europe and globally in general. This is a skill set that we are constantly building. We are at the transition stage, and every transition is in itself a challenge. Thank you. Since I work with this issue in my work, I need to say that the airport have succeeded to become a model company on this in this area, not only in Greece but across Europe. At least with the awards that you have been awarded. Yes, indeed, we are very proud of this. Thank you very much. Now, passing over the torch to Mr. Skiadas. Now, you are standing next to two bank representatives. The adoption of ESG criteria is combined with accessibility to financing and favorable financing terms. Let me ask you this, and this is the opportunity to make your complaints. What are the main issues that concern your company with regard to the banking sector, and how do you embed this in your strategy? Which are the most important opportunities or challenges in this in working with banks? So first of all, let me say that just before the banking sector starting asking for data in order to evaluate ESG criteria and the relevant risks, our company, due to our international exposures to clients that had specific requirements, we had already started demanding and collecting such information in order to get certification. Then the banking sector came by and has created a framework of a reference framework for data, and I think that this effort has improved the CSID, our obligation to disclose and issue a sustainability statement containing specifically data is something that is of great requirement, because we need to provide many information on our operation. This is a dire need, and it will help the banking sector because now big businesses and the banking sector knows is that big businesses need to report fully transparently report data on this issue with quality assurance by the auditors. The great quality for the banking sector is that when we look at the sustainability reports of our competitors or of our clients or the clients of our clients, so we'll go 2 steps down the chain because we want to know what is the vision of Coca-Cola. We are being the aluminium and another company generates the can that sells it to Coca-Cola. So we need to know where they want to be. What is the vision for the future? We can understand who is transparent in the report and who truly recognize material issues because have an exposure in this industry. But the banking sector does not only deal with industry in metals like Vihalco, but it deals with many industries in many sectors. But the skill set is something necessary in order to be able to understand the material aspect and be able to make comparisons. So I think that as regards our partnership is good and it's getting better and better because the banking sector has started to ask for more targeted information. I think that overall the framework of reporting of the greenhouse protocol is a generic protocol that has a window that one can use, and as a result the information is misleading. You need to read between the lines to get the actual information because Scope 3, and I don't want to go great deal, Scope 3 is something that can be misleading because it also includes the downstream emissions. And you know, this is not our own carbon exposure. So this can give a very misleading picture to banks and say, oh my God, you have so big exposure for this activity. So I believe that the more the skill set is improved and the know-how in this area, the better the banking sector will be able to assess the climate risk and exposure, whether this is climate risk or some other social or environmental risk. Thank you, Mr. Skadias. And now, Mr. Petropoulos. You see increasing pressure from the investors and regulators to embed ESG and climate risks in the strategy of businesses. How do you believe that this framework will develop in the years to come, and what are the key trends that you see on the horizon? Indeed, we've heard this by many speakers. This pressure is growing constantly, especially in Europe. This framework is shaped not only by European institutions but also by the increasing pressure and need expressed by the investors and the market overall, including consumers, for greater transparency regarding disclosures and sustainability practices. The key trends that are expected to set the framework in the years to come, I think that primarily will be the fact that the European Commission will continue, if not intensify, its policies on energy, climate, transport and taxation in order to achieve the interim 2030 target to reduce GHG by 55%. Obviously, this will lead to more strict regulatory framework, especially in industries like ours who are heavily regulated, and the need for mandatory compliance. Regulations like EU taxonomy or SFDR have already made ESG transparency, ESG performance transparency a mandatory thing. And but the ESRD is something much higher requirement because the businesses, there are more and more businesses who have to report this data, and it's quite demanding as regards transparency and accuracy and reliability of the data disclosed. So both Greek banks and Greek businesses need to adapt to increasing demands and requirements, which is expected to significantly affect the way in which businesses overall will seek access to capital. Moreover, the banking industry, we're going to see a full embedding of ESG criteria in strategy, in processes, and the overall risk management framework. Since it has become clear that the SSM and the European Central Bank and the national central banks, this is high on their priority. Another trend that we've been seeing in recent years, and which is quite encouraging and is expected to continue in the future, given that, as Ms. Vassila said, rightly so, the sustainability trip is a team sport, so its synergies and the exchange of knowledge between organizations either in the same area of operation or between various areas of operation, as Mr. Skiadas said. So therefore, we will continue to see these in the years to come, and the cooperation synergies between business and academia, a need for constant education and awareness raising of consumers and small businesses, because big businesses have a good level of knowledge. The development of new financial products linked with ESG criteria. We are now at 2024, and there was a revival of the green bond market. The two large Greek banks have issued bonds of 1.5 billion to fund sustainable projects, which is quite important. The need for quality and quantity measurement of ESG performance to overcome the obstacles that leads to acceleration of innovation and of digital tools that banks were not used to using so far, such geospatial data, GIS platforms. And again, there we see how important the cooperation with scientific community is. Humanity already has the technology it needs in order to perform this transition, so we don't need more technology. So the challenge is not to discover the technology, but to embed it in our decision making. And finally, a point that Mr. Skiadas mentioned, we see that investors and supervisors start focusing more on the supply chain and the need to have a sustainable supply chain, not only within the strict confines of your own operation, but how you manage your suppliers and your value chain overall. This is something that will come across more and more in the near future. And just to summarize, because we don't have much time, I believe that in Europe, the framework for embedding these risks in the operating models will develop faster and faster. We'll see this happening at a more rapid pace. We're going to see the use of new financial tools. Advanced technologies will be used to manage the operation. I believe that this will be very important, and to a great extent will define the future of sustainable financing and growth in Greece and Europe. Now, thank you, Mr. Petropoulos. Mr. Kokovinos, focusing on the social dimension, what about ESG criteria and climate risks do not only concern the environment, they also have a social dimension. What is the importance of embedding these factors in credit risk assessment? How do you believe the sustainable development can positively affect access to financing? Well, I pretend not to see the time, but I will try to be brief. So the question is very interesting. Why? Because so far the truth is that the supervisor's instructions discuss climate and environmental issues, namely embedding these risks in monitoring of portfolios, etc. But it is a fact that we must not overlook the social and governance aspect of the ESG. So I'd say that there are two dimensions here: the banks as organizations, who I believe, as far as governance and social aspects are concerned, have taken some step forward because they were already working in a rather strict supervisory environment. And I believe all of us, and we see that across Europe and Greece, we had all selected to follow a logic of corporate social responsibility, because most of all, banks contribute to progress and possible contribution to society. Therefore, now the requirements, the regulatory requirements as regards social criteria for our activities is just one step further. It's not a simple step, but it's merely just one step forward, and I believe it is within the culture of our organization to embed the social aspect as far as the way we operate. Governance-wise, within the banks, a governance aspect is something that supervisors have been evaluating for a number of years as part of the tests, and all these framework that has to do with proper governance is something that for many years have been in the crosshair of our supervisor. It is something that we were always being evaluated on. Now, if we look at banks as financing bodies for our business clients, again here it will be to our benefit to see how we can raise awareness amongst our clients and provide the required support without being detrimental to the societies that we finance. For example, we finance a big business, big company. We need to see whether this this business will build a production center that will be detrimental to the local area, a plant in a specific area. The change of the business model of a company. The Public Power Corporation needs to distance itself from lignite production, but this causes problems in Amideo, and Ptolemaida, and Megalopoli. The banks play a role there, and they can finance under social criteria to try to mitigate greater social inequalities in the communities there. Moreover, banks need to manage the responsibility risk. A bank that finances problematic businesses or companies that do not have good score in environmental or social issues, we could receive poor publicity from clients, from the press, and this might result in illegal action taken against us. So it is to our benefit to try to upgrade social awareness of our clients and try to integrate social criteria in the financing. In terms of governance, the clients, the large business clients, are at a rather good state. They have their own regulatory requirements, and I believe that all major businesses, due to their corporate social responsibility that they follow, they do offer give back to society. That there are regulations, the Capital Market Commission and EU regulations transposed in the Greek law that require from big businesses to follow a strict governance framework. The challenge is slightly bigger when we go down to smaller sized businesses. Now, trying to introduce a proper, no, rather, let me change this. The governance might be proper, but trying to convince trying to make small companies to prove that their governance is proper, that will be a challenge. So this is necessary. Then companies need to be able to prove that their governance is correct. This is something that the European Union had not placed such gravity on this. They usually handle it through the ESRP. The European Banking Authority has issued a program that stipulates that by the end of 2025 there will be disclosure templates that will concern social risk and governance risk. So all financing organizations will be called upon to disclose. This is part of the disclosures to the public, is not just disclosure for the supervisor. So all financial organizations will be forced to disclose data on our social and governance risk management. So it's high now. We are going to close this panel. Thank you, Ms. Vassila, Mr. Skadias, Mr. Kokovinos, Mr. Petropoulos for participating in this panel, and I would like to thank ICAP for giving me the honor to coordinate this panel, and I will pass the floor over to Mr. Foskolos. Thank you.
Σας ευχαριστούμε πολύ. Ήταν πραγματικά.
Thank you very much. Everything that we heard has been very enlightening. We heard the positions of the businesses, the banks, and we'd like to wish all the best, Ms. Vassila, and a quick recovery, who couldn't be here with us in person, but she was online. Now, before we discuss the next follow-up, the continuation of our agenda, I'd like to mention how important for businesses and the managers who deal with ESG criteria to be knowledgeable of the various concepts in order to be able to help organizations integrate sustainability practices into their business. ICAP Risk Training Institute, understanding these needs, has developed a training program, certified, in collaboration with the Hellenic Association of Risk Managers. At this point, we will move to the third session of our conference and talk about new technologies, the transformation of credit risk management by new technologies. We heard about big data, how important AI is in assessing, in risk assessment, and I'd like to kindly ask to the floor Mr. Dimos Antonopoulos, Senior Process Manager, OTC of Heineken Global Shared Services. You have the floor, Mr. Antonopoulos. Good afternoon. It was with great pleasure that I accepted the invitation from Mr. Konstantelos to take part in this year's ICAP conference, especially when it comes to credit risk and AI. And it's a very happy juncture because my first contact with AI applications was 2 years ago. During the acquisition of ICAP by CRIF, we're discussing with a colleague for the first time. He took his mobile phone and he showed me ChatGPT in a beta version, and I was talking with a machine all of a sudden that was answering very complicated questions, and it was a very special experience, totally different to everything that I had experienced in the past for iOS, Android digital assistants. So 2 years later, AI applications are an integral part of our everyday life, and they acquire increasing role in business life. Now here I'd like to give you some data regarding the hike in global shared services, especially when to cash. We're a team of 300 people operating in 20, or rather serving 26 operating companies throughout Europe. We manage 14 million worth of orders, translated into 8.5 million documents issued, mostly credit notes and invoices, and so on and so forth, yielding a 25 billion turnover approximately. And similarly, the structure is as follows. We're an end-to-end organization, and which includes credit risk, invoicing, and price and discounts, collection, disputes, and bank statement processing. So we do realize that we are in a very complex environment, as every country has totally different operating conditions, because there is a different route to market, different geographic distribution, different seasonalities. And added to this is the fact that consumer trends keep changing very fast. With everything we've heard so far, there's the environmental aspect that is added, playing a key part in credit risk, because the extreme weather phenomena of the past are becoming quite frequent. And a typical example during the talk of Mr. Constantino, who showed pictures from Valencia and Thessaly. I had in mind that in 2019, in our company, Athens Brewery, there were some problems caused by some extraordinary phenomena, and they had to do with I remember in Chalkidiki, a tornado, or but a very mild one, or a storm somewhere. But we see that we have increasingly such phenomena in the environments where the businesses operate, like the wildfires in Rhodes or the floods in Thessaly, etc. And I'd like to stress that I took my position 2 months ago, September 2024, and in these 2 months, I have talked with the management teams of Poland, Czech Republic, currently Spain, because only these 2 months they have dealt with phenomena that were unprecedented, not frequent in the past. So it is clear that an organization like this, like ours, is an ideal field to integrate and develop AI and machine learning applications. These are two terms that are part of our life and are added to other terms that we've been using. We heard about digital transformation, agility, methodology, innovation culture. Now we have ESG and something else which has a strong presence, and this is business acumen. Business acumen is the skill to make quick and effective decisions guided by strategic insight, data analysis, and market foresight, combining practical knowledge with the ability to anticipate business outcomes or results. So on the one hand, we have AI, which allows machines to execute functions that usually call for human intelligence, but now we see that artificial intelligence can perform all sorts of functions, including natural language dialogue, but with some limitations currently, which have to do with the fact that AI relies on algorithms for the learning, which allow the system to learn and be improved over time. But on the other hand, it has to do, this learning occurs on the basis of the quality of the data. So if the data that are entered into the system are biased or inaccurate, then the AI system will reflect these biases and these limitations or inaccuracies. On the other hand, we have business acumen. And how we will be able to develop this to the maximum. So there's clear relation between the capabilities of AI and how it can be put into practice in business through business acumen. To achieve this, we have to include AI strategically, adding value. Adding business value and also enhance the competitive advantages. There are a lot of directions that every company can take depending on their field, their industry. Regarding our industry, the key issue is risk management, and in the combination of AI and business acumen, the key elements have to do with with credit risk analysis, customer base analysis, optimization of collection procedures, a wide range of data. So currently we are in a position to constantly develop and implement new practices and new programs. I'd like to share with you a very practical program which arose from a concern of a Heineken company in Brazil. And this concern had to do with the difficulty in that country to collect receivables because it has a very large exposure to bad debt. So Brazil was the ideal case for the implementation of a tool that could find solutions, such solutions. A country with a lot of spread and a large market, that most of the players do not abide by the rules. So we needed a better way for them to use their data, historic data, sales data, for instance, payment data, and at the same time identify the credit risks. And the ultimate purpose, of course, was to identify the credit terms for each customer. So Brazil realized that they had to come up with a new solution. It was called Credit Engine, and in fact, it is a system that uses a wide range of data in order to suggest the right credit terms and prevent the risk of default. So this system uses information such as sales, payments, and it's also a system that keeps improving over time, learning from data, learning from new data. So how did this system help? It yielded some impressive results, which had to do with above-the-line improvement of revenue, specifically because there were customers that, well, in the past, were always blocked with the proper use of data. We could have recurrent sales without delays in payment. We managed, or rather, Brazil managed to reduce bad debts by 23%, and they also optimized collectibility with by 6%. In fact, they reduced the receivable time, collection time by 6%. Without entering into a lot of detail, I'd like to explain the overall framework from the conception to the development of the application. It all started with a question. And the question was how to use predictive tools and data to, like AI, to reduce bad debts and at the same time have better, more accurate definition of payment terms. And this solution was, as we said, the credit engine with these advantages being quite clear. So when it comes with automated, more frequent credit limit analysis, fair granting of credit limits, potential use of models output for either prioritizing customers, low-risk customers, so as to release orders much faster, or by speeding up charging of clients who delayed their payments. 4 key stages to develop the tool. The first has to do with data collection. In this case, the priority was to collect data, quantitative and qualitative data, because there is a wide range of data that are not accurate. So in this case, data, billing, credit control, sales, material, and client data were included into the system. So credit control information had to do with the credit rating of the customer and the use of data from external providers like ICAP. Then credit limits and whether there were requests for credit term extensions. We also use data from sales, because sales have a wide range of information, especially customer data analytics that were included in the application, in the data collection, and also client data that were very useful for the application. The second stage was data transformation, because we had the raw data that had to be developed, had to be edited and developed in order to be used. So the next, after collection, a single data set was created with the most relevant client information. We identified the metrics that could be extracted from this data. Then there was the data modeling, whereby the key, then not data modeling, but the data metrics. And finally, bad debts were modeled, whereby the model used historic data and customer behavior based on delays in payments, etc., so as to predict the risk of default and creation of bad debt. It's worth mentioning that the quality of data is a top priority, because if the data are deficient, then the output will also be deficient. The application output will be deficient, and therefore the purpose will not be achieved, the target will not be achieved. Then came data modeling. So data trees had to be developed, and then we optimized them based on measurable data. The database was split into training and the validated database in order to check the model efficiency. And this yielded the end result, the end output rather, and the end output is what you see on the right-hand side, but you can see it better here. So the output was information that helps users manage risk for individual customers separately, because in Brazil it was possible, because sometimes it's a matter of legislation as well, or regulations. So in Brazil, they could not only determine the credit limit, but also determine the credit terms for each invoice, thus achieving the results that we mentioned earlier. Something very important regarding all this, it is actually there was an asterisk in data modeling that this whole procedure was performed using customizable parameters that can be adapted when the results are not optimum or when they are affected by externalities like climate change. So by way of example, we see some of the parameters that we can adjust or customize, hence achieving higher accuracy of the output. Now, when it comes to AI, there are a lot of solutions that we constantly consider. Apart from credit risk, there are solutions for client prioritization based on risk assessment, so that every collector can know where they should focus first. Also, AI applications that have to do with the fact that the machine can learn how to assign tasks, so it's task-oriented environment that distributes or assigns the individual tasks. So there is equal distribution of the work burden. So we don't see people being overworked and others having ample free time. And this is also a result of business acumen, because in this manner, every employee can pay attention to the most important tasks and focus better. Another thing where we wanted to focus had to do with procedures. As we said, there are 26 operating companies, 5 procedures. All in all, we're talking, if we only had one standing operating procedure, one SOP for each one of them, we would be talking about 130 SOPs. But in the case, we have got different markets, different route to market, on-trade, off-trade, all sorts of different parameters. So there are some thousands of SOPs for these 26 countries. Therefore, a major effort was made to improve the business acumen and focus on the credit risk improving procedures, these SOPs. And this had to do with how we will manage all these SOPs. So we have integrated into the system all these SOPs. We have entered into the system all these SOPs. Enabling the system to identify and evaluate these SOPs based on best practices. And also we can compare all the SOPs of different countries for the same procedures in order to see what is the best SOP in each area, for its purpose rather. At the same time, all people, instead of checking CBI reports and KPIs on a daily basis, anything that is measurable and defines the performance of each, to use parameters so that the system can learn and issue alerts only when they fall below some thresholds, or when we need to place special emphasis because of a potential credit risk. Obviously, this has led to an accelerating procedure. Therefore, accelerating process rather. We accelerate process capabilities, and users can perform tasks because everything works through MS Teams very automatically, so people get automatic alerts throughout the process. What I wanted to, in fact, share with you here today is that I am thrilled when I deal with AI because there are excellent solutions that can be found. Every day is a new day with a new capability or possibility. As we're speaking, there are different initiatives underway which concern OTC, the broader sense of the term, aimed at reducing risk and helping people identify at all times what or when they should intervene. And I conclude with a question, which is, can artificial intelligence replace human intelligence? As I said, what we see is that currently this is not possible. I don't know if there is someone laughing at me because there are developments that I'm not aware of. But what we're certain of is that the AI will be helping us and will be an ally of ours in order to have the best possible practices and continue the effort to reduce credit risk in all aspects of our work and of our business. Thank you very much.
Thank you, Mr. Adonopoulos. AI is indeed fascinating. We're still at the start of the journey. There's a lot more to learn. I would like to ask Mr. Yannis Kamitsos, Director of Financial Risk Management with KPMG, who will discuss how AI is transforming credit risk management. Mr. Kamitsos, you have the floor, sir.
Ευχαριστώ πολύ.
Thank you. First of all, I would like to thank ICAP and Mr. Konstantelos for inviting me to speak to this very interesting conference. I'm Yannis Kamitsos, Director, Head of the Financial Risk Management with KPMG in Greece. The topic of our discussion today is how AI and machine learning can be embedded in credit risk management, what opportunities and challenges lie ahead. On an introductory note, let me just say a few things on where we stand today as regards artificial intelligence overall, the framework of integrating AI. Contrary to ESG, where the main driver of change that come horizontally in the banking sector, which is the regulatory framework, there's great reporting requirements, CSRD, FSDR, and many other requirements, and banks are to a great extent forced to embed the management of environment, social and governance risk in their processes, in their reporting, etc. With AI, the situation is somewhat opposite. They've identified the benefits coming from AI, whether this has to do performance improvement or data processing speed or automations, but there is no one strong, robust regulatory framework, though the need has been recognized, but there is no strict regulatory framework for that. The European Union recently launched the AI Act, which in essence is an effort to define a regulatory framework regarding the management of risks from AI applications, and the EU setting the framework where organization, not only banking organization but cross-sector organization, can use, given the recognition of the relevance of AI. If we can speak of the banking sector and risk management, this has to do with pricing, with managing credit risk, market risk, operational liquidity risk, fraud detection, which is something very serious and enjoys many benefits from AI, trading, optimizing portfolio management, RegTech. That's great. The public opinion has also acknowledged the benefits of AI. We always hear about ChatGPT and how it can be used. But as we said, the key problem of adoption AI in the banking sector, the lack, or at least recently, lack of a very well-structured regulatory framework. In a survey conducted by KPMG International with big banks in Europe, we tried to reflect how are European banks using AI and ML technologies in their operations. 76% of banks responded that they use AI ML methodology for model development in risk management, either as challenger model at first or even in their models. In the production models, 19% of banks only answer that they use AI ML methodologies for model validation, because it's a lot more difficult, and we'll see that further down. What's interesting to see is that 65% of banks replied that their model, that they have implemented a model risk framework adapted to the techniques of AI and ML. So there's general trend in this direction. We see here some areas that are starting to embed some techniques like market risk, credit, fraud detection. That's key. Customer interaction, market risks, etc. The key main challenges that banks have identified internationally is explainability. What does that mean? Many people see AI as a black box, and that we feed it data, we get we give data, we get data, but nobody can explain how these results are counted. In a very highly regulated area like business, that banking, we need to have full explainability. Complexity, very complex methodologies. This is something that is probably not explainable, which is very important. And fairness. There's great discussion has started on whether these algorithms, if left to their own devices, they will be making decisions that are not fair. So what do we mean? We want to give a loan. We can't possibly give a loan only to men or only to women, or those living in the north areas of the country, not in the south. So that we should ensure the fairness, and that is where the human factor plays a role. I also mentioned the AI Act of the European Union, which recently set the first pillars of a regulatory framework for AI. Even after that, the banking industry feels that not all the pillars of the regulatory framework that are required have been introduced in order to regulate AI. When an organization starts embedding AI and machine learning, but just a parenthesis, let me tell you the difference between AI and ML. Artificial intelligence is the entire framework of process automation. Machine learning is the algorithmic part. What are the benefits of incorporation, but a well-structured incorporation of AI in credit risk management? There's the performance improvement, because it is well known that this improves accuracy, speed. Now there's a possibility of processing data at much higher speeds. Efficiency in taking tactical and correct decisions. Risk management. The second benefit, AI does not only present opportunities, there are also management requirements to cover the risks caused by AI itself. We spoke of ESG, that it creates risks that the banks must manage. So AI will too create risks from its use. So a structured incorporation in credit risk management procedure will help better manage these risks. Now, third benefit, compliance with regulation. Automation of many procedures will help correct operational mistakes in reporting, in delays of reporting, essentially improve the bank's compliance and the obligations it has vis-à-vis the supervisor. Another benefit is promotion of the public trust. The public wants to see banks incorporate AI in their processes. It's going to be an optimum use of AI applications because more or less we all use such applications. It's very important that a well-structured corporation will bring the ethical use of AI, which is a very important pillar. AI must be used responsibly, as we'll see further on. Let's stop and see 5 main pillars that AI governance must follow for credit risk management. Adequacy, what does that mean? The new models that will replace the older generation models will not do something differently, but they're going to do whatever the older models did, but there's going to be a more often ongoing monitoring. Transparency and explainability. The new AI models must not be black boxes. Everyone will need to be in a position to explain the result generated. It's the only way for banking organizations and risk management units to get approval from the supervisor that these models operate exactly as they should operate. Fairness and ethics, as I said earlier. These technologies, these models may not create biases against specific subgroups of the population. They cannot operate by themselves without human monitoring. Accountability. People are still accountable for that, accountable for the results, for the outcomes. One cannot claim that a model, a technology is responsible for the decision making by a banking organization in credit risk management. Finally, data privacy. This is more topical than ever. This is something that's more topical than ever, exactly because AI and ML technologies use huge volumes of data and huge speeds. It's more important than ever to secure the privacy of data, that there are no private data, and where private data are there, that they're not being used, etc., and they're properly protected. I mentioned that a small percentage of banks internationally incorporate AI techniques or are trying to validate in their own way AI models compared to those that use this methodology to develop the models. And why is this the case? Because now the validation is much harder. And why is much harder? And this is a key challenge for credit risk management units of banks to incorporate, because we're talking about huge volumes of data, many different available methodologies that could be used to explain something. We don't only have one linear accounting regression. There is a plethora of technologies that are non-linear. We need to have a very serious feature engineering, because there are many data, so there's hundreds, thousands possibly possible variables that could be included in a model that will come to explain credit risk. So how these variables are selected correctly and quickly is critical. Fairness, as we said, and explainability. I need to stress here that nothing changes in terms of the model risk management cycle. We had the development, validation, the cycle between development, validation, implementation, ongoing monitoring. This is exactly the same, but the validation part becomes considerably more complex. Some challenges that I mentioned earlier. to the challenges of validating credit risk models that incorporate AI ML techniques. Like we said, we have huge volumes of data, quite often unstructured data. The choice of methodologies using a random forest or XGBoost or creative boosting or a neural network versus a linear equation. The feature engineering, how variables are selected, is very important, and how they are selected quickly in order to maintain very good performance, explainability, and fairness. Many people believe that these methodologies are still non-explainable. The reality is that methodologies are now more explainable than ever. There is no black box anymore. Many solutions have been developed that open up this black box, as we will see. And fairness is possibly the most difficult part of incorporation. How we can secure that these algorithms, no matter how useful they will not create biases against specific population groups. Let me discuss some technical issues just to give you a taste of what is happening in terms of best practices as regards the model evaluation for credit risk measurement. Nothing changes. The same techniques, the same statistic metrics that we've been using in the past, we're using now. Nothing changes as far as this is concerned. Model interpretation. So, many methodologies have been developed that are acceptable by the international community, which, no matter how complex a model is, this does not affect our ability to explain the results. Let me just mention the partial dependence plots. The Shapley values, these were proposed for the first time by the Central Bank of England a few years ago, and they're now being adopted by many banks in the UK and in the rest of Europe now. There's a very interesting paper as to the Shapley values. If you're interested in those who are into mathematics, I can recommend. But most of the partial dependence clauses that are trying to simulate what a prefix does in a linear equation. For example, if we want to measure the PD as against the unemployment rate, one would expect that there is a plus prefix behind GDP, or rather minus. The higher the GDP, one would expect that the probability of default would go down. The PDPs are trying to simulate this prefix. One very easily see how the model will operate regarding the change of some variables. Exactly what is happening with a linear equation with a prefix. Let me spend a couple of minutes to discuss a target operating model that we're developing at KPMG globally for incorporating AI in various organizations, including the banking business and the risk management units, credit risk in this case. These are 6 key steps that are needed for an organization to incorporate AI in their operation in a structured manner. First of all, governance. The organization needs to generate the structures, the principles, the policies, the standards of using such techniques within the organization, the KPIs and KRIs that are needed to monitor the performance of the systems or models, and by extension the risks generated by them. Nothing different from the risk appetite framework. Technology, it's very important to see and explain here that there are many available technologies which currently implement what we're discussing. Is very important for an organization to decide, to examine this and decide what technology best suits them, best suits the organization. Functional processes. Now, incorporation of AI will have to occur in an integrated manner. The business plan must contain new targets, measurable targets of how these things can be incorporated. Otherwise, a few years later, we're going to end up discussing the same thing. People. This was mentioned in previous presentations. We need upskilling and reskilling. It's very important. AI is not as simple as using ChatGPT and getting some outcomes. It requires quite serious and heavy mathematical algorithmic background, so it requires upskilling and reskilling, and of course a service delivery model. In the few minutes that I have left, I would like to give you a taste of a proof of concept that we developed at KPMG in Greece, where we want to see whether this thing works or is it just theory. So what did we do? We did a computer, one local computer, not a server, just one local computer. We found publicly available data. What sort of data? In this case, it was data from Kaggle. There was a portfolio of 500,000 customers for credit cards. Something similar with Revolut, anonymized data. Very easy to download this data on the computer. It's available to all. What did we say? Let's build a PD model as we would do with a bank. We followed all the steps that a credit risk management unit would use in a bank to calculate the PD. We calculated that. What did we do then? We developed similar methodologies with machine learning algorithms in order to have our benchmarking and see what improvement we saw in their performance and how we explain the result. We made the comparison and we wanted to see where we stood. These are the results. I don't want to trouble you too much with technical terms, but we wanted to show here the first line is logistic regression. It's a classic methodology used by all banks to measure the PD. This is a performance based on various statistic metrics. Let's take Gini, for example, which is a metric that is trying to show how good and bad borrowers are separated, or credit card users. That's point 27. We're using various methodologies. One simple decision tree. XGBoost. What is XGBoost? XGBoost is many trees together. Many decision trees that one informs the next. It helps the next make a decision. You see how high the Gini is. So the first question is probably overfeeding. That if we were to test the exact same feed-in with an out-of-sample or out-of-time sample that had not been used for development of a model, this would drop down to 0.27. Now it was close to 0.70 if I'm not mistaken. So it was a very good proof that these were not accidental outcomes. We tried also random forest, gradient boosting, and simple neural network. We saw that we found a methodology that took the Gini to 0.74. Why is this? Because of the methodology? No, because of the feature engineering or feature selection. We developed internally an algorithm that tried to get huge amounts of data. We had 500,000 for the logic of one local PC, right? This is huge for the PC. If we scale this to a server, of course, the data volumes will change. But what did we do? We developed an algorithm which intelligently tries, while the ML algorithm is writing, it selects the variables from hundreds of variables we have created. They select the variables that optimize the metric you want to optimize. The Gini, for example, this was an in-house development. It took us approximately a week, max. So we came up with this outcome. The next question. Once we've proven that compared to an existing model, the commonly accepted model, the performance is better. The next question is it explainable? Can somebody explain the result, or is it a black box? The answer was that it's not a black box. We see the partial dependence plots. What do these partial dependent plots do? They're trying to simulate the prefix in a linear equation. These are some variables that were considered statistically important to explain the probability of defaults. The interest rate, for example. The outstanding principals, the principal amount, the outstanding principal amount, the utilization of cards. What does that mean? The gray are the population allocation. All other being equal, as the interest rate increases, the interest rate that the borrower pays, the model, the XGBoost in this case, expects to see an increase in PD up to a certain point where it starts dropping, so that's the outlier of the distribution. We don't have people from the underlying population. So what we're expecting to see in a prefix plus, as the interest rates increase, the PD increases, and this is something that we can confirm. Now, outstanding principal. The more the borrowers or credit card users pay their balance, the PD drops. This is something that we saw, we noticed in many variables. I'm just showing you some examples of results to see how this appears, how we can visually see the explanation of the results. It would be an XGBoost or a very complex neural network. It would be exactly the same visualization here. Very quickly, just showing you some result of how Shapley values would operate. First, the Central Bank of England was first to use that, and other banks have started using systemic banks, global systemic banks in England, and other countries started using Shapley models. And of course, in the US, of course. What this shows, it shows that we're trying to see again in a different way how the variables that we consider statistically important in the methodology that we chose, how does this affect the explanation of PD. This can be at the level of one borrower or across the entire sample, the blue and red, so that as one variable increases, you expect the PD to increase, and as it reduces, you expect it to appear reduced. More or less what we saw in the PDPs, but now we go down to the borrower level. Yet one more confirmation that the model that we created was a model that explains what we would expect to see, but with a much, much better performance. That's all from me. Thank you.
We thank Mr. Kamitsos. I believe you shed light on key aspects of how AI can help us manage credit risk. And at this point, I kindly ask Ms. Daniela Vergali, Director Global Transformation Services of CRIF, who's going to talk to us about how data and analytics can help better understand customers and create greater value, something that gives new opportunities for businesses. You have the floor, Mr. Vergali.
Yes. Okay. Can you hear me? Okay, good. Okay, we have discussed today, all the initial sessions have presented how uncertainty or how the world is actually changing very fast. I remember one of the very first speeches talked about the only constant item is basically uncertainty or the ever-changing world. So what I would like to do now is just to share with you some ideas, some real-life experiences of how basically we can improve risk management tools and processes in order to be better positioned at reacting at the changes that we have to face. Data and analytics, but I can actually also reverse and say analytics and data, because as we'll see, analytics will also help us extract the data, because sometimes data is hidden, valuable information is hidden somewhere. So I would like to show you basically how this can be achieved. This is the outline of the presentation. A very brief introduction. I will not waste much time on this, also because most of the concepts that I wanted to share have already been introduced. I will take you through how artificial intelligence can use to improve risk management. I will take you through two cases, quite different from each other, but these are quite, just to give you the idea of how far we can go. And then some final thoughts and wrap up. Okay, I'm not going to spend much time on this. We have already gone through this, geopolitical crisis, market forces, customer behaviors, whatever. I mean, it's a mixture. It's simplified, but it's just to say that it is quite a complex environment that we need to move on, to work on. The rules of the game are changing, and we need to play the right cards in order to be successful. And technology is one of the enablers, and I'll explain why. Someone in the previous speeches spoke about making also informed decisions. So basically, the key point that we need to know is to face is basically how we get to know more about the customer, be it a consumer, be it a corporate or whatever. It's just how do we improve the information assets that we have about that customer. We can say traditionally it's social demographics or firmographics, financials, legal proceedings, whatever, credit behavior, both internal, within the bank, within the organizations, or with the banking system, or with the banking and industry system. But the reality is that the overall framework is far more complex. If we want to really look at the very exhaustive way the customer, we can consider different aspects like geospatial information, for instance. If we know where the customer lives or where a business is located and so on, can this provide us with some background information about the counterpart? Is that useful or not? Credit behavior, real estate, for instance, or digital footprint. If I log on to the web site of a bank or any institution, a telco or whatever, and I use my iPhone, is that information valuable to discriminate, to help the business know more about myself? ESG, I don't want to mention about ESG. I mean, it's been discussed quite a lot. Transition risk, about physical risk, and so on. Connected parties and value chain. This is something that was also introduced earlier on by our colleague from Piraeus. Knowing who is connected to the customer that you're working with, does it help know more about the customer? Maybe there is concentration in terms of business. Maybe there is contagion risk. So if one of their suppliers or their customers fail, goes bankrupt, what happens to your client into the portfolio? So can we know more about this? So the answer to this is yes. I mean, these are just examples. It's simplified. It's not meant to be exhaustive, but these are real cases that we have been working with our clients, our partners. I want to, the key message is that basically some information, as I said, is hidden. There is information which is not structured. So is there a way that we can extract that information so that we can use it, make it available for modeling, for customer assessment? The answer is yes. Artificial intelligence is the answer to this. Okay, so I will just take you through some of the cases. Some are here, like transaction information. We'll see a business case about this. The second case is basically instead generic because it affects all of the information areas that we see in here. Moving on, artificial intelligence. Let's start with just a little bit of glossary, just to frame it, okay? It is just, when we talk about artificial intelligence, it's basically the mimicking basically the intelligence of a human being. How? Using advanced analytics methodologies. It's just definitions, okay? It's just machine learning methodologies. These algorithms are used to predict or to classify, okay? So they make use of huge amount of data in order to understand more about a specific aspect, a specific phenomenon. So let's say, oversimplifying, machine learning methodologies, algorithms are used to predict something, probability of defaults, like the case that we saw earlier on, or to classify. So I want just to build clusters of homogeneous customers, for instance. So these are very powerful tools when there is a huge amount of information available for analysis. Deep learning instead is used to understand something, to interpret something, just an image. What can I get out of the image? A text, a sound, whatever. No? This is what is used, for instance, to read satellite images, which is also the foundation of the physical risk modeling that we have. Last is generative AI. Generative AI is creating the new contents in terms of images, in terms of text, in terms of whatever, even sounds. So this is the hierarchy, if you wish. It's just to give some definitions. We saw during the previous speech by our colleague from KPMG, regulation has paid a lot of attention to these methodologies, to these aspects, because of the reasons that KPMG already reported. The key point is basically that the regulation has acknowledged the value of these methodologies. So they know there is value in evolving the practices, in evolving the methodologies. There are some concerns like fairness, ethics. Are we making ethical decisions? We need to be aware of that. We need to make sure that that is the case. There are other aspects which I don't want to focus on. It's just a matter of time today. Last but not least, which is actually the most important piece of document, is the Artificial Intelligence Act, which is prepared by the European Commission, which will become law, and that's really making a huge impact on the way organizations and financial institutions have to cope with such advanced methodologies. I don't want to focus on this, but just to mention just one point, human judgment. Human in the loop, as it was defined also earlier on. So whatever we go through now, from now on, human judgment has always been a key part of the game, okay? So it's not like the machine is doing everything on its own. We need to make sure that we understand, we as practitioners understand what is going on, and we are also able to drive, in a way, the model itself. We need to make sure that the model doesn't make huge mistakes. Let me tell you something like artificial intelligence. We'll see something, ChatGPT. Many people mentioned this. Some months ago, I asked ChatGPT to tell us what is the relationship between Dante Alighieri, which is a very famous poet in Italy, back to the 13th century, so 700 years ago, and the economic policy of the European Union. ChatGPT answered. Okay? So I got nice 20 lines showing what is the relationship between the two, apparently totally independent aspects. This is what we want to avoid, hallucinations. Because if you ask ChatGPT and if you ask the wrong question in the wrong way, actually, you get always something, but wrong. Or maybe just, again, as I said, hallucinations. And this is what we need to make sure that never happens. We saw the legislations. This paper was co-written by us and Banca Intesa San Paolo. It's the largest Italian banking group. It's about how machine learning methodologies are used within the risk management in financial services industry. It was presented and discussed also with the European Banking Authority. And it actually takes us through what is the legal framework that we need to move across, so even the CRR, so the Basel regulation, Artificial Intelligence Act, GDPR, and so on. So how these advanced methodologies can actually be used in real life by financial institutions. It's a mixture of regulatory overview, methodology, plus real case applications. There are 5 different cases that we presented. Whatever, if you're interested, just let us know, drop us an email, just get in touch with us. We will share the document. But this is to say, all the regulation that we saw, all the concerns that have been raised, the industry is moving, because there is no way that we can forget about this. We can ignore the benefits of these methodologies. So, case number 1, as I said, I've got 2 cases. totally different, okay? So don't expect continuity between the two. The first one is improvement of the early warning system of a bank. It's a tier 1 bank, using the most of the information that was available, okay? The JST, basically the ECB, assessed the model and said, no, it's not working. It's not adequate to support the bank in managing risks. So we developed, it was a two-phase project. We improved the model, basically, adding different data sources compared to the previous ones, and using different methodologies, machine learning. So the key point is in the second step was actually using transaction-level data. Think about your bank account statement. You see all the transactions. You have a description in there. You know the date. You have the description, where, what, at which place you bought, and so on. This information is unstructured. It's just a text. What we did was to read the text and to assign a label to each of the different possible descriptions that we found. So we categorized the transaction data. It is basically a way of making usable something that is unstructured, structured something that is not structured. And this data, think about if I'm a consumer, I know how much I'm paying in terms of utility bills. I didn't know before being able to categorize. I know if I'm paying, how much I'm paying of taxes. I know my shopping habits. Where do I shop? What kind of shopping I do? I know if I'm going to restaurants, if my consumer portfolio, the habits. I'm buying stuff for the newly born in my family. So I know there is a change in the lifestyle, there is a change in the needs, and so on. It's just some examples I'm giving you. And similarly for the businesses, how much am I paying for legal consulting, legal services? How much am I paying for raw material purchases, and so on? How much am I cashing in from invoices? It's just getting very granular to the information we have. What did we do? So basically we used an artificial intelligence-based categorization engine. The categorization engine, artificially based, is something that reads transactions, interprets the transactions and say, okay, this is a raw material purchase transaction. This is a betting transaction. So I'm betting on the web, if I'm a consumer. So we know, and we get a description, a label to each of the transactions. What we did was to use 10 million transactions per month, okay? We used 24 months, 36 months, so a huge amount of data to be used. And using all of the granularity we could achieve, we created 20,000+ variables, pieces of information, 20,000. Now you have to manage this. Okay, we created a lot of knowledge, but we have to be able to make useful usage of this information. We used machine learning models. We challenged models. We built 4,500 different models in order to choose the one that was best performing. And, okay, quite fancy, quite advanced and so on, but we needed to make sure that the bank gained the full confidence about the model, which is what the model is doing, why the model is behaving that way, and is the model in line with my expectations, so meaning basically the human oversight into the model development. Out of the 20,000 variables, we even talk to the credit risk people and say, okay, this is the list of variables, not all of 20,000, but the most relevant. There are methodologies that help us do that. Are you okay? Is anything missing in your opinion? So that we could even go back and pick up all the pieces of information that were discarded by the AI algorithm. What is the process? Basically, we used all the traditional information, so balance sheet. This is an example for the consumer, but for the business portfolio, but internal behavior, public info, the credit bureau, so payment, credit behavior with the banking system. We added the transactional data It's illustrative, but we had information about the cash flow. We had information about how I'm spending my money. What type of transaction? We were able to identify what is ordinary versus extraordinary. We were able to understand when and how much is being paid in terms of fiscal duties, taxes, okay? All sorts of information. Bear in mind, we got the 20,000+ variables here. So what are the benefits that we got? We were better able to say, we are talking about early warning now, to identify the riskiest part of my portfolio, okay? So what we did is traditional info, it's just the bar, the bright blue, which includes all the, what we call traditional information. And then we say what is the added value of the new methodologies. And then you see that on average we get 10% more risk exposure being addressed, being highlighted, being triggered, like keeping constant the analyst capacity. We are able to address and to manage 10% higher riskier exposure. In terms of economic impact, more or less 10% reduction of the cost of risk, which is quite huge. On a similar fashion, the same, we're just looking at the bad, at the risky part of the distribution. But if we look at the other side of the distribution where we get the very good ones, we have similar considerations. So we are better able to identify the very, very low risky ones, which, and this piece of information is actually used to better tailor the customer approach, like instant lending. Instant lending means that I do nothing, I just, come, sign, and credit is granted. Because we are able to say the risk is extremely low, I don't need to go through additional risk assessment. Okay, this comes along also with the affordability assessment and other aspects, but this is the enabler for also the process optimization. How does it work, basically? We get, in real life, we get the daily batch process. So the entire portfolio is provided to us. We categorize. So we read the descriptions, artificial intelligence algorithm. We understand what it is about. We attach a label, and then we say, okay, this is it. This information, okay, these are just some examples, but just to say, we get 200 categories, more or less, for the consumer portfolio, and for the business portfolio, more than 170. So imagine how granular we can be. In the past, before doing this, we had debit transactions and credit transactions too. Then you have number of credits, number of days, and so on, but it's just a combination of just 2-3 pieces of information. Now here we are getting to really the most of the information power that we can achieve. And this is how the process, simplified way, it looks like, what it looks like. Data is categorized, credit data mart, decision engine, and the decision engine, which applies the models, rules, policies, and so on, would then feed different systems. Monitoring system, first of all, because we're talking about early warning, but also CRM and the application processing system, because we want to enable or disable some strategies, some activities on those customers. So this is case number one. The paper I showed contains far more information if you want. You can have a look at the document. The second business case instead is about using of generative AI. Generative AI, remember from the definition I gave, it's about creating the content. It's about understanding and generating the content. So again, it's a project which is actually going on. We are finalizing phase one. The process of second level controls is basically fully manual. So what they do, what the bank does is basically have a manual assessment of more or less randomly selected credit files. So there are some rules, but that's basically what they do. They don't have a risk kind of driven selection criteria for this second level control system. So basically the idea is to move from a fully manual and risk insensitive kind of approach to something which is more automated. There is still the manual revision of the analysts, but it is more risk-driven. And I'll give you some examples of how this happens. So basically what we do is we use generative AI solutions to read the comments in the application file that is processed. Credit analysts would write their own notes and comments. We basically read those comments and make sure that what is written there is actually coherent with the decision that is suggested by the system or by the analyst, and is coherent with the additional information that we have within the systems. Then the goal is to increase effectiveness of the process because we want to have it more automated. We want to reduce and this is not an easy problem, but we want to reduce the psychological effect. If you have 5 analysts reading the notes and the comments, they may come up with different ideas because their psychology is also different, because that day is different, because they're more tired than the other days and so on. So there is a human effect in the decision-making process that generative AI will help to kind of manage. And then we have a risk-based set of cases that we want to focus on. High-level process. How did we approach the project? We first of all selected a sample of about 60,000 credit applications, which were decided with all the comments and so on. We had interviews with the analyst because we wanted to understand what the analysts do when they assess the application. And we wanted to do what I said earlier on. We want to avoid hallucinations, basically. So we need to understand exactly what their view is. We prepared the prompting. The prompting is basically the questions that we want to ask. Remember, what is the relationship between Dante's poetry and the economic policies of the European Union? We want to avoid that, questions like this get always something that sounds reasonable. We want to avoid the hallucinations. This process is iterative, so that we prepare the prompting, we run the prompting, we see what comes out of the system. We go back again to the analyst and say, does it work for you? Does it make sense? And so on, iteratively until we get to a final okay. By doing this, we are simply saying, use the generative AI in the most correct way to avoid undue, unexpected, unwanted answers to your questions. Finally, we come up with the anomaly identification that have to be managed. As I said, it's a two-phase approach. These are the 6 areas of investigation that we are currently managing. So from credit policies, effects, unlikely to pay, analysis of the cost structure, and so on and so forth. More will come in phase 2. You can see different areas that have already been identified, but they have to be kind of added to the assessment. This is a real example coming out of this project. This is exactly the comment that you get in the application form made by the analyst. So what is the Gen AI doing is basically it's reading the document, it's understanding what is in that document. It is flagging basically that there is a unlikely to pay case and legal disputes ongoing. And in that way, we are able to say, look, what you did might not be what you decided, which is in the note resolution, might not be the right choice. So what we do is basically we have a sort of rules guiding the anomaly detection priority setting. We identify this as being high priority, and then this is passed to the analyst team for management of that case. So this is the way it actually works. And the questions that we ask generative AI are the ones that we prepared in the previous phase. Just to give you an idea of what we came up with, different areas, different priorities, and more or less this is what is rated by the generative AI solution. What is the advantage? That we are objective in identifying what has to be done, what has to be checked and controlled. It's not like human-driven, purely human-driven. And we have a sort of risk-based criteria in setting the priorities that have to be followed when doing running the controls. So conscious of time, there is a break, so I don't want to steal more time out of the break, but some thoughts. This guy is a historian, and he used to teach history of technology back in the previous century, in the 60s and 70s, at Georgia Institute of Technology. He came up with 6 laws. Technology is neither good nor bad, nor is it neutral. It's there, it's affecting our life, and it's affecting the way we can perform. So we cannot ignore it. Good or bad, we need to be able to manage it, to make it good, because it's not neutral. It will impact. There is another point I want to mention. Amazon, Meta, Google, Microsoft, this year, in 2024, will have spent more than 200 billions. I mean, there is a clear idea of where we're going, and it's an irreversible process. So again, we cannot neglect technology and how much technology can help us. There is the last law, law number 6, which is technology is a very human activity, and so is the history of technology. Just to also reply to your last question, like artificial intelligence, that I was smiling because I had also this in mind. It's about us making the most of the technology. It's about us putting ourselves in a position that we use technology as profitably and as safely as possible. This leads to my final slide, which is, I finished. Thanks a lot.
Thank you, Mr. Vergari. Thank you. Very insightful, very inspiring indeed. Λοιπόν, και με την ομιλία του κυρίου Vergari.
And with his speech, we have completed this 3rd session. We saw how modern technologies transform credit risk. Before we take a deep dive into AI and see what it has in store for us, we'll take a short break. But please, let's keep it to 15 minutes because we are running late. And we will come back with the 4th session after the break in 15 minutes from now.
Facing new horizons can be a challenging journey. CRIF serves as your reliable compass, guiding you safely and effectively to your destination. As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. Always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level.
DNB Finance Analytics is the new complete AI-driven credit-to-cash platform from Dun & Bradstreet. Its credit intelligence application helps to manage risk, increase operational efficiency, and enhance your business insight. What sets credit intelligence apart is the Dun & Bradstreet Data Cloud, the world's most comprehensive global business data and analytical insight. Our industry-leading scores and analytics are integrated into the workflows, providing unprecedented insight to help you better manage credit to cash. Credit Intelligence features 3 applications: Decision Maker, Account Manager, and Portfolio Insight, that together help you run a powerful, automated, and efficient credit department. With Decision Maker, you can automate credit decisions to quickly onboard customers and use the highly configurable online credit application to kick off credit requests. DNB Finance Analytics also includes the DNB Credit Check for Salesforce app, which allows sales teams to submit requests and receive instant decisions right in Salesforce. Account Manager makes it easy to expedite account reviews and better understand how to manage your aging receivables. And with Portfolio Insight, you can conduct advanced portfolio and account analysis to easily manage and monitor your global portfolio, including alerts. Credit Intelligence seamlessly integrates with Receivables Intelligence for a complete credit-to-cash solution that's flexible and easy to use. Ready to get started? Head over to our website to learn more. Risk is changing, and regulations are evolving with it. Compliance professionals need to stay ahead with greater third-party risk visibility and more robust due diligence processes. Meet DNB Risk Analytics Compliance Intelligence, a continuous KYC/KYB monitoring and compliance solution to help streamline due diligence, simplify decision-making, and increase defensibility. Powered by the Dun & Bradstreet Data Cloud, DNB Compliance Intelligence provides access to critical compliance risk insights on hundreds of millions of businesses across the globe. Quickly verify third parties, customers, and partners. Conduct enhanced screenings. Expedite risk analysis and decisioning with automation. Incorporate ESG and cyber risk into third-party compliance evaluations. Continuously monitor shifting compliance risk. And simplify compliance risk reporting. Incorporate and manage your third-party compliance policy within Compliance Intelligence to automatically monitor risks that are relevant to your company and automate decision-making. Verify third parties, customers, and partners fast with industry-leading firmographic, financial, and corporate linkage insights. Screen entities and individuals against sanctions, watch lists, politically exposed persons lists, and adverse media with speed and precision. Identify beneficial owners and ownership structures with interactive maps and help connect owners holding multiple roles to the source of wealth. Incorporate industry-leading environmental, social, and governance performance into third-party due diligence and keep up with emerging regulatory requirements. DNB Compliance Intelligence, a powerful tool to help you modernize compliance risk visibility, eliminate manual processes, and prepare your business for the future of compliance risk to come. Take the next step to a more defensible third-party compliance program today. Visit dnb.com/compliance-intelligence to learn more.
Με 70 χρόνια αξιοπιστίας, κάτι νέο ξεκινάει στην οικονομική ενημέρωση. Ημερησία.gr. Τα νέα των επιχειρήσεων. Οι πολιτικές εξελίξεις. Οι πραγματικές ειδήσεις. Οι τάσεις του μέλλοντος. Οι μεγάλες αποφάσεις. Όλα ξεκινάνε από εδώ. Ημερησία.gr. Η ημέρα ξεκινάει από εδώ.
Facing new horizons can be a challenging journey. CRIF serves as your reliable compass, guiding you safely and effectively to your destination. As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. Always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level.
Παρακαλούμε πολύ να έρθετε στις θέσεις σας. Ξεκινάμε στα επόμενα 2 λεπτά. Ευχαριστώ πολύ.
CRIF serves as your reliable compass, guiding you safely and effectively to your destination. As an expert in both credit risk management and marketing services, CRIF draws on its distinctive global data assets to equip companies, institutions, and individuals with advanced solutions for a discerning navigation. always guided by sustainability and in full compliance with regulations. We have the experience to shape the credit cycle, steering you towards optimal decision-making destinations. Our knowledge and vision serve as a roadmap for individuals, empowering them to chart the best routes for a secure financial journey, promoting financial health and guarding against risks. CRIF's crew are in it for the long haul, consistently providing innovative financial and digital solutions for our collective progress. Integrating information and analytics becomes a gateway to uncharted business territories. CRIF services act as your privileged flyway towards digital transformation, taking you to new heights and anticipating trends. We broaden the frontiers of information, data intelligence, platforms, offering a complete array of financial services for diverse stakeholders. Our solutions are a North Star to guide your decision-making, strategy exploration, and risk forecasting, leading you on the optimal path for making timely choices. In the digital expedition, CRIF is your trusted partner, supporting your transformation. Remember, the longest path begins with the first step. Your journey to success begins with CRIF. CRIF. Together to the next level.
Λοιπόν, επιστρέφουμε στις εργασίες του συνεδρίου μας.
We're back. The proceedings of our conference. The impact of Gen AI in the business landscape shapes the future, bringing about revolutionary changes that could change products and services. This can lead to new prospects in data analytics, research, development, and improvement of customer experience. Having said that, we're starting our fourth session of our conference. I'd like to ask Mr. Thomas Mavroudakis, CEO of Empedus, to talk about this new amazing world. Mr. Mavroudakis.
Ακούγομαι. Ωραία. Καλησπέρα σας. Ευχαριστώ.
Good evening. Thank you to ICAP for the opportunity given to me to share with you my experiences. My name is Thomas Mavroudakis. I am CEO at Empedus, a company that has, from its establishment, worked on AI and uses AI to a great extent. It has level 7 degree of maturity in using AI. I'm going to explain later on what this means exactly. I started working with AI in 1987 with my first publication, my first paper. Then through academic research up to 2013, I followed all the development of AI, and I saw how AI is changing our lives, the way we work, the way businesses organize themselves. And from 2013 onwards, I've been a CEO in various companies, in various businesses, and wherever I had the opportunity to apply what I had learned in organizing the way that the companies I was managing each time to operate and helping other companies organize themselves in a similar fashion. I followed the presentation so far. That's why I will adapt my own presentation so as not to repeat the same things and give you some more hands-on examples of how use of AI and Gen AI, the way we work, how they change the way we organize ourselves in our businesses, and how we give value to our customers and how we give value to all the stakeholders of a company. The first example I will discuss to the clients. I think that it's very difficult. Compliance, rather. We'll discuss compliance. We have to define what compliance is practically, not theoretically. Companies have an organization, and well, they have an organization and they have a hierarchy. There are the general directorates, departments, and each one has a description of what they're going to do. They have their respective jobs with specific job description of what they do, so that the business will operate and create value for all stakeholders. This is the hierarchy, the hierarchical perspective. We also have the horizontal perspective, where we see businesses as a set of procedures, processes and procedures specifically on the one hand, and on the other hand there is a group of people who have been trained to implement processes and procedures by themselves or in teams. There is a third dimension, but I wouldn't like to overburden you with information. This is the value chain, but let's not discuss that now. Now, all this makes up the entity model of a company. Now, companies, in their operation, they will need to comply with the regulatory framework, the authority documents. These come from legislation, decision of authority, decisions of management, etc. And all this, in terms of compliance, there needs to be a person responsible for it within each entity. So a warehouse manager of a company, a natural gas management company in Thessaloniki, will have to read all this legislation and tick off every paragraph and think, what do I need to do in order to ensure that I'm compliant with this requirement, this paragraph, etc., etc. Well, practically this cannot happen. So what do companies do? They created compliance departments. And this compliance department would help the managers in each department by creating questionnaires and guidelines, so as to have the response to control objective, namely have some safeguards in place. There was again the huge problem of, because at the end of the day, a safeguard could be the answer to 2 or 3 paragraphs in one document, another paragraph in another document, and we often went to the same person and tell them, please confirm again the same things again and again and again. And at some point this became very tiresome and gruesome, and the persons did not perform as required. But now, as time and years go by, and as we grow, this authority documents, the regulatory framework has become too big. A couple of years ago, I tried to complete the vision, and with a company of 300 people, and we had the financing from research programs, we tried to make sure that this company is compliant with the entire regulatory framework and ensure and have the attestation by each managers in each entity. And then the entities, guys, sorry about, I feel like a professor. These entities are dynamic. Let's not forget that. So a company, imagine an entity type application that has, let's say, a PPC, they have approximately 600 applications. All these changes. Next week we have 605. The following week we have -2 +3. Each manager, each person responsible for each application must make sure that the paragraph of the regulatory framework that concerns to them will have to respond so as to be constantly compliant. So you understand that this is something that is fluid and very difficult. And to come up with what I started saying before, for the company with 300 people, I had in my team 10 people, and I tried for 4 months, and I managed to reach just 40%, and the company did not have such a large regulatory framework. Now, we reach a problem, how we're going to solve the problem and how we can make sure that we're compliant. But then came Gen AI and gave us the solution we needed. Of course, it's not as simple as it sounds, because as previous speakers have already said, you need to ask the right question. You must have the right prompt. For a correct prompt for compliance, we need approximately 400 pages. In order to be precise from the language model, and the language model to give you specifically what you want, namely the questionnaire that will help the person is charged within each entity of the company to answer so as to get the attestation. And also there's going to be information on how often this is going to be audited. So wherever we have applied this using Gen AI, the results have been quite successful, almost 100%. So at attestation level, because attestation is a snapshot. Attestation is not something dynamic, of course. Having other tools, not only AI at our disposal, that managing tasks and workflows and automations, you can have a real-time snapshot in compliance. No, of course, not to such a great extent. But now, to conclude, you understand what I'm trying to say, that the putting in the correct prompt at the ChatGPT model is what will solve the problem. The models compete each other, and now we have 128 Ks of prompt, the capability of 128 Ks prompt. That's 520 pages. This has been a solution. I'm sure that ChatGPT and Llama and all other models will soon offer this capability for such prompts, and we already apply that with our clients with great success rates. And first of all, we complete the vision. We have analyzed all the regulatory framework, which too is dynamic. We've made dynamic analysis of all the company's entity. We apply the control objective on the editing model of the company, and so we have the controls. In the same way, as you know, for risks, we have the risk statements. Risk statements must be applied in each entity, and then following the same process that we apply for attestation, we get the risk assessment, and this will have to be generated automatically. It is impossible for a group of people to generate this, or a compliance team. Now, in general, information from Greek reality. We are a company that we get 70% of our revenue from abroad, so only 30% comes from Greece. It's very interesting because it's very interesting to develop models for the Greek language, because the Greek language is very interesting to develop models for it. So in this case, we have an example today that you can, and I urge you, those of you who have compliance problems, I urge you to follow, to go down this path, and I guarantee success. You're going to find a lot of engineers to do that for you, because, you know, in the market we have a problem of finding the right personnel. For this job, there's a lot. When approximately 3.5 years when we started with Gen AI, we had challenges, we had problems. We had personnel turnover approximately 2.5 years, and after the Gen AI, people stayed. People stayed back in order to learn, and they liked it because at the company we have a policy that at least with young employees or field employees, as we call them, they need to do that through prompting in our own LLMs. Whatever they do through prompting. So that was the information I wanted to share with you. I would require a lot of time to analyze how a company is organized using LLMs and Gen AI. But what I can tell you in the time I have left is that in my company we have a central LLM. All field engineers, all field employees do whatever they do through prompting. We make sure the LLM is Mistral, is a French open source model, but it's linked with ChatGPT and Llama 2 and mostly with Anthropic. That has enabled us to do many things with 128K prompt. Jose is a team, because when you have a very specific, very accurate prompt, it finds the model and it says, I can answer this. I don't know if you've seen it. Usually some model you get the answer, I can't answer, I don't have the information. And this creates a task to the model development team, and Mistral as an open source model is very good because it enables us to locally train it, so we correct it, we retrain it without needing great cost in order to train and fine-tune the model. So the team grows, the team corrects, the team develops, and we have a model. And at the end of the day, this model is a company, and the model is constantly developed, constantly improved. And of course, electricity is a problem because this uses up a lot of electricity. It requires extended facilities. We have some problems with electricity. This is one of the major issues where we're going to get the energy to feed in the model. That's what I wanted to share with you. Unfortunately, there is no time available for dialogue. Thank you very much. Thank you. Thank you, Mr. Mavroudakis. And at this point, I would like to ask Ms. Natalia Shlovanova, Global Open Innovation and Startups Ecosystem Director, and Mr. Olivier Kenji Maturin, Emerging Tech Innovation and Adoption Program Lead at Innovicos, who in their presentation will analyze how AI, and specifically how Gen AI, generates a new business model, bringing about changes to procedures, processes, products, and the services of a company.
Okay, hello everyone.
Στοιχεία για το πώς δημιουργήθηκε η δυνατότητα ανάπτυξης
Innovecos is an open innovation, global. We run a few open innovation streams. You can see them here, which are all focusing on finding and identifying the interesting new use cases which could be implemented using the partners from the ecosystem of startups. When we're talking about startups, we're not speaking about the greenfield pre-seed. We are collaborating with the ones which are already well-financed, having the good level of product enhancement, existing customers. But what is important in working with startups is that collaboration brings us and accelerates us, enabling our technology to grow faster. Because, of course, you can be good, but not in everything. I mean, technology is moving much faster than the company may be able to adopt to everything you have in mind. We make a lot of researches which are also helping us to identify the new challenges globally, and we use the network of our ambassadors, which are bringing us use cases, partnerships, new names, of course, along with the business and innovation strategy that we are sharing on the strategic level. Today, we are going to speak about the venture builder approach, which is a generative AI factory, which is very important for a big company to be able to, let's say, start, experiment, and test on the things which have no benchmarks up to now. And this is what we are doing within the Innovecos factory, generative AI factory. But before going to exactly the things that we are doing within our generative AI strategy, I would like to mention the basics. What is the basics for being able to adopt and adapt fast to changing environment and changing in technology, changing in the trends to catch up the market? Important is to have the innovation culture in place, growing and developing, because that helps you to react fast, to test fast, to kill fast, and not to be ashamed for failures. That's also a very important part of the innovation culture. A lot of times people do not have time or are even anxious about stopping and thinking if the same things that they are doing day to day can be done in a different way. A lot of times we are surrounding ourselves with the people which we feel comfortable with, right? But at the same moment, it's very important to find around your environment the differently thinking people, because only by putting two different people together, you can increase your strengths. Organization structure, this is very important, that the innovation has a very fast way to the decision making, because otherwise we are losing the time. The speed is a very important definition for running the innovation efficiently. Anxieties, this is more a psychology or mission bias, when the people are more scared to do things than not to do things. They think they feel unpunished for not doing things than doing them with a failure. Or loss aversion, when you feel pain much more when you get to failure from the loss than when you get to gain. And that all creates very strict barriers for the innovation inside the organization. But what can be done in order to move on the culture of innovation? We have to start. We have to start and we have to accelerate the innovation. Why? What's the difference between the closed innovation and open innovation? Open innovation it's open. It has many more sources to be fed with the new ideas, with the new partners, with the new ways to make the same things in a different way. Apart from the fact that we are very fast identifying the new technology, we are very fast bringing the findings to the executive level in order to make the action and not to be afraid to make the mistakes. When you look at this graph, this is very important, that the closer the innovation strategy is to the business strategy, the more stronger the company is. Why? Because innovation feeds business and accelerates the growth. At the moment, this is becoming more and more complex, so the innovation should be very close to business and should be very adaptive to the increasing changes. A lot of uncertainties are happening around the world, which might be changing the business strategy, so we should keep together, not to become the zombie, innovation zombie, let's call it like this. But generative AI is something which is definitive, so we should not be afraid that this is something we could be mistaken on. And that's why skipping the slides about what is generative AI, because in CRIF we know very well, and Daniele already described what is the difference, and that we are working on it very extensively also with our offering to the customer. Look at this slide. Only 50% of the big corporates are experimenting with generative AI. That's a very low number. We are at on the right side. We are already scaling. We are running. And that's because we had a good basis of being able to adapt the laboratory that was working on a different topic to the one which was becoming more important, which is generative AI. So, having said that, you all know and probably already read a lot of things about the potential of generative AI to be implemented inside the companies. We're talking about individual productivity. We're talking about these new use cases, which are helping to enhance the products, services, but also to deliver them faster. And in CRIF, in our innovation unit, we have classified, we have used the classification of the cases we are working on. The first slice is a generative AI for everyday usage. You can use Copilot from Microsoft, you can use open platforms, and or you can use let's say, LLM models fine-tuned in order to optimize the day-to-day processes that could be applicable to any one of us. It's not linked to our unique selling proposition or unique offering. Instead, golden use cases, we call them like that, are something which is a longer run, bringing the higher effect on our business, meaning our offering and how we deliver, how we born the offering, and how we deliver and maintain it. These are the golden cases. We have to remember very well and already start thinking now with our colleagues, what will be the next step for our business, how it will look like in a few years from now, because the new technologies are transforming the processes, they are transforming the way we are working every day, so that will have a direct impact on the organizations. And, which is very important, training, education of your colleagues, in order to not reject, but accept as a challenge, as an improvement, as the way to reduce the stress, let's say, of the day-to-day activities, to start be using the tools, but being helped to implement them and being helped to test them. So in CRIF, we have been, since OpenAI became accessible for everyone, we started immediately research, and at the moment we are already becoming a factory. We have become a factory, which is delivering the use cases for the group, which we are collecting them, we are fine-tuning them, we are segmenting them, we are defining the priorities, of course, and reusability of them. We are building the infrastructure in order to run and deploy these cases in cloud. Cloud is a very important facilitator for adoption of generative AI. Very important. So think about the cloud strategy as another element to facilitate the adoption. And we are a centralized team. We have created a multi-skilled team working in an agile way. We call them a factory. Important is that that's a unique combination of IT and data scientist skill is a generative AI specialist. This is something, a combi of the existing skills. And that's very important, again, for the training that the people should be given on professional and on the user level as well. And so this is a multidisciplinary team which is delivering in a factory, Toyota-like approach. Now already we are at this level, the use cases that we are going to show you some of them today. So I pass to Olivier to go through all the pieces of the frame that we are day-to-day working on.
Thank you, Natalia. Kalimera Sas. Hello, I'm Olivier. I'm leading research and adoption program for emerging technology at Innovecos. I will quickly give you a small insight of what we have been doing. We are together with generative AI, which is right now our biggest topic. ChatGPT, 2 years ago already, everything was changed. I can really literally tell you, I follow this topic. There is no one single day that looks like 1 month of news happened, new models, new things. It's very difficult to continue, so just want to give you, okay, where are we standing with these technologies? My favorite Pope, right? These tools get easier and easier to use, right? We can generate extremely realistic pictures of people, famous people, celebrities, using tools that you don't need to code for that, right? And this was emerging very fast. And this picture, actually, I showed that already last year. If you were last year, sorry for that. No spoiler also, because, well, there are a few things I want to show again to other people, but there are new things as well. These tools get integrated into every day, right? So this is Adobe Photoshop, and Photoshop now, you don't need to be an advanced creative graphic designer to change a picture. You just describe with the text what you want to do, right? And the picture gets modified based on your prompt, based on your demand, right? And these tools are very powerful, easier to use, integrated into the daily business. But we find it also very useful for trainings. This is Natalia, training about generative AI.
My name is Natalia. I'm the head of Innovecos, and here we would like to present you the opportunity to listen to
English.
the training
Sometimes
sessions
we want to translate that to our colleagues, right, who live abroad.
If you are here, that means... Så hej alle sammen, mit navn er Natalia, jeg er leder af Novacos, og her vil vi gerne præsentere dig for muligheden for at lytte til træningssessionerne dedikeret til emnet generativ AI.
This is in Danish, so
Hvis
we
du
can
er her,
translate
betyder det, at du er nysgerrig og gerne vil forstå bedre, hvad
very easy to
generativ
share
AI er.
information. But that's not the only thing we can do, right? No spoiler. We can also use the technology, right? So I can give to an avatar text, and he can speak the text with a perfect lip synchronization.
Ποτέ δεν είπα αυτό που λέω τώρα. Έγραψα μόνο ένα κείμενο και τώρα μπορώ να το πω ακόμα και στα ελληνικά. Η τεχνολογία της δημιουργικής τεχνητής νοημοσύνης είναι πραγματικά εκπληκτική και εξελίσσεται με εκθετική ταχύτητα. Βρισκόμαστε στην αρχή μιας εποχής που θα μεταμορφώσει ριζικά τον τρόπο πρόσβασης στις πληροφορίες, τη δημιουργία περιεχομένου, την εξυπηρέτηση των πελατών και τη λειτουργία των οργανισμών.
So, I know there is a small accent, but I tried my best with my Greek, right? Here, I never spoke this text. It's not a translation. I took a video, 2 minutes of myself speaking about anything, about my cats. I gave that to a commercial solution. Then I gave a text, which I copied past, and the avatar is speaking about that. And now I have a model that can speak hours, countless of hours, about content using generative AI, so I can train, I can speak about different topics, thanks to generative AI, which makes it very powerful. What we also see this year, especially, generative AI integrate the workplace. Maybe you have seen that. Copilot, Microsoft. Of course, we were curious to see what can we do with these softwares, right? Because very often we have very nice figures coming from vendors like Microsoft and others who says it can do miracles. We believe in experimentation, we believe in trying, right? Instead of really believing one-to-one what is being said. Copilot, if you don't know, right, that is a kind of ChatGPT inside of Word. It's very convenient to create document, contract. You can refer to other documents. I find it extremely useful in my daily life. We wanted, however, to understand who can use this software because it is an expensive software. If we equip everybody at CRIF, it's few millions. But what can it do for us? How can we trust it? Can we trust it? Does it provide a useful result? So for us, it was very important to understand this aspect, privacy, output, how much we can bring, and to measure its impact. So we had a massive test with 300 people at CRIF in order to understand what these tools can do for us. So really pragmatic, measuring the output so that we can know how to scale and go next. So our focus was mainly on productivity over the last few months, right? I think like most of you, we have seen a lot of other speakers talking about what they do on that. I just want to quickly show you how we use that or how we think we can use that for our other activities, for our product services. Daniele mentioned how we help our clients doing that. I'm just going to show you 3 short videos, 1 minute for each, about how we implement the technology. Started with a POC, now most of them are live, yeah? Most of them are live in these quick videos.
Μία από τις δευτερεύουσες δραστηριότητες των χρηματοοικονομικών αναλυτών μας περιλαμβάνει την ανάγνωση προσεκτική ανάλυση των εγγράφων οικονομικών καταστάσεων. Αυτή η διαδικασία ήταν χρονοβόρα, απαιτεί σημαντική προσοχή στη λεπτομέρεια, με τον κίνδυνο αποσπασματικότητας και πρέπει να γίνεται με συνέπεια, σε φυσική γλώσσα. Με την έλευση της γενετικής τεχνητής νοημοσύνης, αυτό μπορεί τώρα να αυτοματοποιηθεί αποδοτικά και οι αναλυτές μας μπορούν να βασίζονται σε έναν προσωπικό βοηθό τεχνητής νοημοσύνης. Απλά εισάγοντας τον φορολογικό κωδικό μιας εταιρείας στο σύστημά μας, η τεχνητή νοημοσύνη δημιουργεί μια αναφορά ανάλυσης απόδοσης. Αυτή η αναφορά καυχέται για μια εντυπωσιακή ακρίβεια 95%, αντικατοπτρίζοντας τα συμπεράσματα που θα έφτανε συνήθως ένας αναλυτής. Αυτό επιτυγχάνεται επειδή το μοντέλο τεχνητής νοημοσύνης έχει εκπαιδευτεί να χρησιμοποιεί την ίδια μεθοδολογία με τους αναλυτές μας, συνέπεια και αξιοπιστία στις εκτιμήσεις. Η τεχνητή νοημοσύνη όχι μόνο αύξησε την παραγωγικότητα της ομάδας, αλλά χρησιμεύει επίσης ως εξαιρετική αφετηρία για πιο εις βάθος αξιολογήσεις. Αυτό επιτρέπει στους αναλυτές να επικεντρωθούν σε πιο σύνθετες εργασίες, ενισχύοντας την παραγωγικότητά τους και επεκτείνοντας την ικανότητά τους να αναλύουν ένα μεγαλύτερο χαρτοφυλάκιο εταιριών. Η επόμενη βελτίωση θα είναι η ανάλυση άρθρων ειδήσεων που σχετίζονται με την εταιρεία. Αυτό θα επιτρέψει στην εταιρεία να εκτιμήσει την επίδραση των πρόσφατων γεγονότων στην απόδοσή της και να προβλέψει πιθανές μελλοντικές επιδράσεις. Ενσωματώνοντας τις οικονομικές καταστάσεις στην ανάλυση της, η τεχνητή νοημοσύνη παρέχει λεπτομερείς εξηγήσεις για τις πληροφορίες που προκύπτουν από τους δείκτες KPI. Συνοψίζοντας, η γενετική τεχνητή νοημοσύνη είναι ένα ισχυρό εργαλείο που αυξάνει την αποδοτικότητα και εμπλουτίζει τη διαδικασία ανάλυσης με ολοκληρωμένες και ενημερωμένες πληροφορίες. Εξοικονομεί χρόνο για τους αναλυτές, επιτρέποντάς τους να διεξάγουν πιο βαθιές αναλύσεις, ξεκινώντας από μια εξαιρετική επισκόπηση.
Μεταξύ των καινοτομιών που φέρνει η γενετική τεχνητή νοημοσύνη, σίγουρα υπάρχει η δυνατότητα προσαρμογής των διαδραστικών διεπαφών. Η απάντηση στις ανάγκες των πελατών με μια εξειδικευμένη συνομιλία είναι πάντα διαθέσιμη και χωρίς αμφιβολία μια επανάσταση. Η Margot είναι η πρώτη εμπειρία της CRIF στην υιοθέτηση της γενετικής τεχνητής νοημοσύνης. Χρησιμοποιείται σε μια διαδραστική λύση για την υποστήριξη των πελατών. Ο Tom τελειοποιήθηκε από τους ειδικούς της Margot για να απαντά στα αιτήματα των πελατών με τον πιο αποτελεσματικό και σχετικό τρόπο. Οι άμεσες απαντήσεις και η γνώση του συγκείμενου είναι μια επιτυχία στην εμπειρία του χρήστη και εδραιώνουν την Margot ως κορυφαία λύση. Η ίδια προσέγγιση είναι εφαρμόσιμη σε διάφορα συμφραζόμενα, συμπεριλαμβανομένων των εσωτερικών αναγκών υποστήριξης για τις πολιτικές ανθρώπινου δυναμικού και το περιεχόμενο του μικροφόνου μας. Το κύριο νικητήριο χαρακτηριστικό είναι η διατήρηση γνώσης στον έλεγχο του πλαισίου, το οποίο ενημερώνεται και παρακολουθείται πάντα κατάλληλα από ειδικούς στον τομέα. Αυτοί οι ειδικοί μπορούν ανεξάρτητα να προσαρμόσουν την τεκμηριωμένη πηγή από την οποία η τεχνητή νοημοσύνη ανακτά πληροφορίες για να απαντήσει. Μια άλλη χαρακτηριστική δυνατότητα είναι η ικανότητα προσαρμογής σε διαφορετικές γλώσσες και κατά συνέπεια στις χώρες μας. Αυτό καθίσταται δυνατό μέσω της κατάλληλης διαχείρισης της διαχωρισμένης γνώσης στα διάφορα τμήματά μας, ακόμη και εσωτερικά, για να λαμβάνουμε απαντήσεις γρήγορα και σε πραγματικό χρόνο. Σίγουρα βελτιώνει την ποιότητα της εμπειρίας μας εντός της εταιρείας.
Τα χρηματοοικονομικά δεδομένα είναι ένα από τα πιο σημαντικά στρατηγικά μας περιουσιακά στοιχεία. Η ανώτερη ποιότητα και φρεσκάδα τους μας διακρίνουν. Πάντα ήμασταν πρωτοπόροι στην εφαρμογή τεχνικών OCR, στην εξερεύνηση δεδομένων και στις σημασιολογικές μηχανές. Αυτές οι τεχνολογίες βοηθούν στη δομή των δεδομένων που περιέχονται στα χρηματοοικονομικά στάδια της εταιρείας. Εκμεταλλευόμενοι την προηγμένη τεχνολογία AI, έχουμε επαναστατήσει τις διαδικασίες μας για να προσφέρουμε πρωτοφανή ερμηνευτική ακρίβεια. Αυτό επιτρέπει ακριβείς αποτιμήσεις αξίας και, χάρη στη συνεχή μάθηση, επιφέρουμε σημαντικά κέρδη στην απόδοση της αυτοματοποίησης. Χάρη στη γενετική AI, έχουμε επίσης συμπληρώσει το τελευταίο ελείπον στοιχείο, την ερμηνεία και την επεξεργασία του κειμένου. Αυτό μας επιτρέπει να προσδιορίζουμε με ακρίβεια τις πληροφορίες που μας ενδιαφέρουν και να τις δομούμε με τον πιο κατάλληλο τρόπο για τη σωστή χρήση των υπηρεσιών μας. Μπορούμε τώρα επίσης να ασχοληθούμε με ποιοτικά θέματα, εμπλουτίζοντας τα δεδομένα μας με πιο εις βάθος πληροφορίες και υποστηρίζοντας τους αναλυτές και τους πελάτες μας με περιγραφικές συνοψίσεις ή χρήσιμες γνώσεις. Επεκτείνοντας την προσέγγιση μας σε διάφορες χώρες, επιτυγχάνουμε σημαντικά κέρδη απόδοσης με πιο ακριβή δεδομένα και ταχύτερη διαθεσιμότητα προϊόντων.
All right, so I thank very much Francesca and Pietro for their performance, or their avatars actually. I think, was it okay, the voice? It was a little bit accent from Cyprus, right? Apologize, we contact the AI company for that, but you were able to see a little bit where we are exploring, but this was already 6 months ago. We are moving and delivering more use cases, but we are very excited and keen on using these kind of technologies. We also see these technologies, or we try to apply them also in our product. For instance, we think about, okay, how our clients themselves are using the technology. If we think about the banking, for instance, conversation, customer services, there is definitely something here that everybody is exploring. Accessing information, we have seen that, or generating content, generating code. And our client in banking, at every touch point, everybody can be impacted or can use these tools in order to make their life better. Internal facing, however, not exposed with the client, but internally, I think makes it better. That's why, for instance, we think, okay, we have a loan origination solution. What if we integrate inside of that a chat box where the decision maker, after the underwriting, can dig into the information, can dig into the data. Here, for instance, for a mortgage, he can ask questions, but who is the owner? What is the collateral? Is it in good condition? So he can interact with the tool in order to avoid overseeing things, right? And what we have also seen, and also in line with what Daniel was explaining, we can extract more CSR information using generative AI, like as you have seen also with the example of balance sheet. But there are several use cases that we explored together with our colleagues internally that allows us to show this kind of examples to our client to inspire them to see, okay, how they can use themselves the technology. And that's also why we have built a huge framework, a methodology to scale this kind of approach to our own colleagues internally, also that we show to some of our clients. Our clients are interested also to understand how we can leverage this kind of tools in credit risk, but also in other areas. We are very happy to talk about that if you would like to see more in details what are the efficient approach to measure and to test these kind of technologies. Good. That was a little bit showing you what we are doing. What we also wanted to show you is, okay, where is this going? Where is this going forward? A few words on that. We have 8 minutes. We can expect more real-time capabilities. Computing is increasing, realism is increasing. I'll show you a quick video. This is a job interview.
Hi Aidan, how are you? Where are you calling from today?
I'm doing great, thanks, and I'm in London. I've been looking forward to discussing this opportunity with you today.
Great stuff. If it's okay with you, I'd like to dive straight into it. Can you tell me about a product that you've launched that you're proud of and why?
Certainly. One of the products I'm most proud of is a mobile app that we designed to streamline online shopping for customers. It integrated AI-driven recommendations and a highly intuitive UI.
So this kind of use case 1 year ago was kind of, it will never happen, it will be a utopia. This exists in this year as a commercial solution, meaning that you can create your own avatar, you feed it with a knowledge base, which can be your CV or your product description, and you can interact real time, you can even bring it into a meeting, into something packaged as something that anybody can purchase or use. You can even try it for free. Happy to tell you how afterward. But this kind of technology exists already. This is going to be more realistic and more real time. Right? Imagine for customer services, imagine for support, imagine for different use cases. We find it amazing.
Hi, CRIF team. I'm Jane, an AI avatar from Synthesia.
More realism, more emotions.
Already talked about Synthesia back in 2020.
More convincing somehow,
Since
more
then, they've faced
enjoyable
tough
as a chatbot or as a robot.
Just last week, we launched a new generation of very expressive avatars.
This also exists. This is Synthesia, commercial solution available for education and training. But let me show you what Microsoft has in mind, right? Microsoft said, okay, maybe we can take a picture. This is a fake picture. This person does not exist. What if we give it an audio, a voice to that? We take a voice from a podcast and we animate the face. And I will recommend that you watch the face, the emotion that is present on the face.
Have you ever had, maybe you're in that place right now where you want to turn your life around and you know somewhere deep in your soul there could be some decisions that you have to make. Like you know, like it's like things, something was decided for you.
It is a fake person.
And instead of trying to make something that is done,
you might believe that this is a real person, right?
It's like the invitation
in a webcam,
is to make the
in a conference
decision,
call,
commit
in a
to
video.
that, and to start creating.
This is research material. It is not open to the public
when
for
we say
obvious
no to
reasons.
Something, we're saying yes to something else.
This leads to my next point.
But that.
Very quick quiz. 6 faces, one of them is a human. Which one? You have 10 seconds. Okay, 5. Everybody made the choice? Okay. I tell you in 1 minute. These faces are all artificial. They were all artificially created, including the paper note that they have and the handwritten writing, which can be a code, a date, whatsoever, created only by AI in a matter of few seconds. Look pretty realistic, as you might see. Imagine now a digital onboarding. I don't know if you ever created a banking account online or something like that, but very useful. Fraudsters, right? Please give us a selfie or a shot of your passport photo, right? And typically fraudster, once they find one picture that works in a bank or somewhere else, they will reuse the same picture, generate new faces 500 times, 1,000 times in a matter of 2 days. It is very problematic. And the thing is that if you ask for a selfie, right, we can generate the face here based on the face that is on the ID, right? So we can extract that, make it look alike, and it's a selfie where I'm wearing that. That's why often ID verifications, they say, okay, can you also write something on a paper, the date of today, to make sure that it's not a fake? AI can do that as well. The same faces, consistent. This person does not exist. That's why often you have a next step, which is, okay, can you show me your face on a live cam because I want to test the liveliness?
其实有些人说，哎，这个直播换脸它的效果不是很好。我现在用的就是这个直播实时录像。那么直播的话，它这个其实已经是很完善的，包括像这种捏脸什么的，它都是一个常规操作。这个东西是不会破相的，就是包括什么戴口罩啊，或者这个吃个饭什么的。就比如说这个吃个饭，等一下，我先把这个美颜关一下，不然的话等一下会影响。
It's very difficult to understand if this person is real or not. She's even eating with chopsticks. You do not see. Like we had before, it was easy to spot.
摸脸
It's not anymore the case. And that is an open source software available for free on the internet to everyone since 2 years, which is the reason why we have seen a lot of scams, $25 million transferred through someone invited by his CEO to a call. He was convinced it was this person. Very sophisticated, free, available, the URL is there. But there is worse. Since this summer, a new technology has popped up which allows you, anyone without technical knowledge, to take just one picture of your face, of anyone actually here on public, can take one picture of the face and create a deep fake real time on a webcam. On top of that, I can record 3 seconds of your voice and make it say anything that I would like to, that I want, in a method that is quite convincing, 85%. If I have 1 minute, it's better. But it allows anyone to create, on TikTok, for instance, people like that.
Starship. This is probably one of my favorite things that we've made at SpaceX. Like, forget the actual rocket. Like, I want everyone to appreciate the laminar flow.
Is this real?
I'm just as real as you and me.
Oh my gosh,
so
okay.
You know that he's a fake Elon Musk?
And I had a question.
Some person here do not know about that.
Okay, so
there are
I saw
people who are maybe a little bit older, who are more believing social media, but you see people are talking with someone that they think is Elon Musk. They are giving him presents on TikTok, believing that this is really Elon Musk. And this is a technology available to anyone for free. And it is not anymore celebrities. It can be you. It can be your friends, your family, or around. Very easy. And all these kind of tools are available. Adobe. This is my car. And I can mark a place in the car. And I can make my car look like this, send it to my insurance, right? Get it a little bit for that. Very easily, no technical knowledge necessary. Amazing. And people can create pictures of myself. This is myself posing, this is myself with my favorite koala, but I only needed 10 pictures of myself. I can take 10 pictures actually of anybody here in the room, feed it to an AI model, and create an infinite set of situations about you, including situations where you don't want to be, right? Like, I've never been there, or I've never been wearing a weapon, but people can do that, right? Providing your face, and can even animate it, right? And this technology is available since summer, since 2 months approximately. Flux, very nice model, but you see how realistic now it has become and how easy it has become without technical knowledge to do these kind of things. So, who got the right response? No one? Okay. One person, George, perfect. We were 2 days ago in Nicosia, we presented the same, no one. So no worries, you are not alone. Actually, 2 out of 3 persons even believe that an AI face is more realistic than a real face. What does that mean? AI becomes so perfect that we believe it is true. We cannot believe our eyes anymore. Same with audio, same with what you hear. We cannot believe anymore what we hear. We absolutely need help. We need tools. We need AI to fight against AI. And that's one of the important discoveries from our research. Most of the startups were born to detect this kind of technologies, this kind of scams the last 2 years. We had a look at this kind of technologies because it's a very, very fast-moving area, as I told you. So if you are interested to have more details, we are publishing a research about detection of deepfakes with different startups, which kind of startups to look at or which kind of technology to look at. Very happy to continue the conversation about this topic. But I think most important is that you understand that this is something that touches not only the business or a nice presentation. These tools are present, exist today, and might impact your life, your friends, your family. 2 recommendations. What can we do against that, right? Actually, not that much. If you see an online meeting, ask the person to put the finger on the nose. If they have a doubt, that's an advice I got from a cybersecurity company. They say, put the finger in front of the nose to make sure that the person is real. We tried it. It's a bit awkward at the beginning, but it's okay. The second tip, With your friends, with your family, with your children, with your colleagues, share a password, a secret word that only you and them knows, in case you have a doubt that if they call you, if your mother calls you, say that she's in a train station, she lost her mobile phone, she lost her money, she needs a transfer, a word that only you and them know about that. So I really recommend also that you share this kind of passcode or password with each of your friends or relationship to make sure that you are not fooled. And the good news is that this is only the beginning. Technology is improving, it's amazing. AI compute for training doubles every 6 months. We used to have Moore's law, which is this little graph here. Here, this is NVIDIA, and it is not a projection. It has been delivered. Blackwell is being delivered. There has been some delay. But what you see is that the computing is so increasing that the technology is getting only better and better. So we have, I think, little choice. We'll see more capable model, lower cost of intelligence, but this is where we are heading. It looks scary and exciting at the same time. I look forward for both.
Okay, just to conclude, key findings and takeaways, apart from the fact that we are ready to answer to your questions in the break, and also please contact us if you have any further interest. So what is important to know is that generative AI is inevitable. So we have to adopt ourselves, and we have to start to know it better. We have to always think about data privacy, data protection, and we have to use open platforms responsibly, of course. There are a lot of companies which are actually banning the usage of the open platforms. There are the ones which are not banning, but training and pushing to keep the policy, AI policy inside the company in order to increase and accelerate the adoption and the usage day-to-day of the open platforms. Cloud, as already said, is really accelerating because the big tech companies are embedding the generative AI LLMs into their services. So when being on cloud, you can already start using them immediately. Data is very important. So data should be normalized. Data should be stored, and in this way, you can leverage on the data as a key source of LLM to be applied for. No need to have proprietary LLMs, so the point is that there are a lot of LLMs that are available. The important is to train them with your own data, so to fine-tune the existing LLMs. Legal frame is important, I already said, and be open in order to experiment, test, and deploy. So we have come to the point when the new use case can be deployed starting from the definition to the deployment from 2 to 3 months. So which is very, very fast and moving, and we are even increasing the speed. And be aware that the generative AI is a booster in pivoting the digital process and business transformation. Because when you think that you can optimize your business processes just with generative AI, this is wrong. In most of the cases, this is wrong, because it comes to the point when you understand that it comes with automation, robotization, and only matched together, and sometimes the process should be changed in order to reach the bigger scale. That's the digital transformation. So someone has awaked the sleeping bear, and it's inevitable it's going to be faster and faster. But of course, sell me this pen is powered by AI is going to last for a while, unless the new disruptive technology is coming on the place. Coming to the picture which we started from, I would like now to ask you to raise your hands in order to underline who of you are already experimenting. So yeah, you are in the 51% majority of the corporates who are starting to experiment with the generative AI technology. Please raise your hands just for us to know the more or less the point. So 10–20% of the population, correct? When we are looking at each other, correct. We are between the 8 and 27%, so if you have any questions to faster, to accelerate, please come to us. Thank you very much for your attention. Hope to see you next year.
Thank you.
Wow. How exciting, how frightful at the same time. Συναρπαστικό εργαλείο, φυσικά, η τεχνητή νοημοσύνη, ανεξάντλητες οι δυνατότητές της, αλλά...
This is an amazing tool, but at this point, I have to clarify behind the organizer that Mrs. Basler that we saw on the panel was a real person. The lady who was online was a real person, not a deep fake. At this moment, I'd like to reintroduce myself. I'm Yannis Voskolos from Immerisia.gr. At Immerisia.gr, you will find abundant material regarding everything that has been discussed today in this conference. Now, reaching the end of the conference, I think I will keep two things of everything that we heard. First, climate crisis is here, and the challenges for the businesses and societies are assuming huge proportions, be it the recent events in Valencia or the Daniels floods here in Greece. Second, the climate crisis affects the credit risk. All the speakers gave quite specific data on this. New data, a new reality dawns for insurers, banks, and businesses. Third, there is no going back from this from transition, because we heard that the cost would be much higher, or rather, the slow transition or no transition would cost higher than the actual transition, depending on the sector. Fourth, big data, AI, and modern technologies at large are necessary to help in estimating and assessing credit risk, and of course, efficiently dealing with or managing credit risk. We heard about the role of insurers, the key role of banks. We heard the side of the businesses, and today is the 6th of November, and in the US we have a change in leadership. As of next year, Donald Trump will be the new president, and it remains for us to see what will change regarding green policies and green transition, and how this will affect Europe and Greece. And at this point, I would like to call Mr. Nikos Vetas, General Director of VOV and Professor of the Economics University of Athens, who is the most appropriate person to talk to us about the perspectives of the Greek economy and businesses. Mr. Vetas.
Καλό απόγευμα. Τώρα δεν είμαι σίγουρος γιατί το κάνανε αυτό οι οργανωτές που έφτιαχναν το πρόγραμμα να βάλουν κάτι τέτοιο μετά από κάτι τόσο ωραίο.
Well, so as I was hearing the previous presentation, I was thinking that this kind of technology that make you cover productivity gaps that have been generated in 40 years can, if used correctly at a level of business or economy, make up for the lost ground. Or if you don't know where you're headed, they can expand the gap that you have from other economies. I'm not going to tell you anything that's exciting. Exciting things are usually those that are very pleasant or very dramatic. I'm not going to show you neither one, the other, nor the other, and neither pleasant nor dramatic. But for those of you who have gone through the Greek crisis and still have a sign of optimism that you can use this to do something better, there might be some point to do some introspection. I'm going to show you some diagram and you can have your own takeaways. The first diagram does not concern us but our shell, and here we see the growth rate of economies last year, this year, projected for next year, and on the right we see inflation. We can see various things. The first thing we can see is that as regards the anticipated inflation for next year is this is at the level 2% globally. So the projection, and this is a realistic projection, is that this roller coaster of the inflation, right in the right or in the wrong way, is now being checked and controlled, and this will facilitate further and more and faster de-escalation of interest rate. But looking at inflation, we see that inflation has mostly affected Europe, much less the United States or Asia. It was mostly our own problem because we were most exposed in non-dynamic markets and energy costs. Let's take a closer look the flip side of the coin as regards growth. Global growth is at approximately 3%. For those of you who don't remember it, we measure growth on the basis of GDP. GDP is a very simple sum of three different things. We add consumption, we add investments, and we add the trade balance. And this measure, on a global scale, will, the forecast says that it will continue to grow for 3% next year, as was the case this year, last year. This is not per capita. If you want to switch it into per capita, you will need to factor in the population growth. What's interesting and troubling find is that growth rates in Europe is much lower than US and China and Asia overall. This is what we're experiencing for quite a few years now. This is what we will continue to experience for the years to come. Economies don't change that quickly. Our home, Europe, will continue to grow much slower than the rest of the world. Therefore, let's bear that in mind when we compare our country to Europe, that we do not compare with somebody who is global. But let's leave this comparison aside. This is a slide with some positive news. Let's pat ourselves on the back with some congrats. The growth rate of our economy is higher than the European average. The European average is dragged downwards from Germany, that has a twin problem caused by cars and energies, and those related to Germany. Other economies in the south are doing similarly well as we are, like Spain. You see here the quarterly change. Our economy is growing by approximately 2.3%. The national wager is how these 2-point-something% will not be pulled by the gravity of the Greek economy, which is to take it closer to 1%. And what is this gravity force? Is that we need to tax because we have debt, that our demographic is unfavorable, and that there is a gap in productivity. And instead of heading it towards 1%, we're going to do some magic and we'll help it go to 3%. And why is 3% important? 3% is important, first of all, so that public debt does not cause a problem, not today, but in 10 years from now, when most payments will start to be affected. And in order for this growth to be something that citizens will also feel in their own pockets. It's interesting also to see the mix of this growth, the quality characteristic that we say in the technical lingo. Our growth, and this is why it's not sure that it can be sustained, is mostly higher thanks to consumption. We say consumption in a country that was almost bankrupt and most households live at the poverty level. Yes, indeed, there is consumption. It might be that they using up their savings, or maybe that there's a family income, or that there's other monies available. Or it could be that since we're not very eager to invest and save, we just spend it all. there is we learn things at school or even kindergarten. You get a fistful of seeds you can either eat or grow. So the choice that the country is how much of your reserves you consume, which gives prosperity, and how much you plant in order to have more for the future. That's the split between consumption and investment. Let's remember that all of us who say that we want more investments, this doesn't mean that we should reduce our consumption, or this means that we either should reduce our consumption or we must do some similar efforts so to attract money from abroad. So investments is not an easy equation. Speaking of investment, there is all this is based on the Hellenic Statistical Agency. There is an unknown factor in the Greek statistics of our country in the some quarters that the Hellenic Statistics Agency is saying that, or they're forecasting, right? They are making assessments. There are very few fixed investments. Fixed assets investments is what we want, and more than 2/3 of Elstat measures as investments are classified as reserves. Reserves is something that a business creates, but they're not sure they're going to sell. But statistically, it's a balance. It's a balance for all of you who do these things. We don't know what this is. This might go well or not so well. In the last 2 years, there were some ambitious objective for investments, but we only achieved 50% of those objectives, these targets. This is how we feel, the official statistics of the European Union. There are very interesting things we see here, but we don't have a lot of time. We're going to talk about one thing. The left is the total monthly climate through questionnaires to businesses and households. And the climate, if we compare with the rest of Europe, we are faring better. Let me say that Germany is dragging us all backwards. Well, they're dragging us backwards. On the right is just households. And households were doing worse. And you see a deviation. You see that European households, after they were initially scared with the pandemic and were scared with Ukraine, their confidence is starting to boost again. Greek households were afraid, were still afraid, and they are now again afraid. The economic model must close because these guys have to sell somebody. So it's either going to be, we're going to see a decline in the prospects of businesses, or households will start improving their positions. I'm going back to the investments. It's how many seeds you put aside in order to have consumption in the future. Here you can see in absolute figures, in billions, the investments in the years before the crisis. Many of those were financed by loans that were supported by the low interest rates brought about by the euro. This is what happened in the crisis. There was no confidence, there was no visibility. Those who were here, nobody could say what the situation is going to be in 1 month. Investments fell to half, 1/3, and started recovering approximately 10 years later. If one sees this figure, this is the investment gap, and we cannot get it back. And what is the investment gap? The investment gap is that if you go to a typical Greek business, their machinery are 20 years old, and if you go out on the streets, the pavement is broken. These are expressions of the investment gap. Investments have started growing for many reasons. The country is stable macroeconomically. There is an economic policy that supports investment. Investment grade has been ensured, has been recovered again, but this is where we are, and that's the investment intensity in Europe. You see the difference. The second interesting chart has to do with the relations of a Greek economy and its environment. Here we measure two things. This is something that we started measuring because we thought it was interesting. Nobody saw it as interesting, but this is what this tells us how open the Greek economy is. So in the denominator we include imports and exports. It's whatever goes through our borders. Business activity, cross-border business activity, and the denominator we have the GDP, the total economy. The Greek economy is becoming more and more extrovert. For me, this is extremely important. It means that we not live in our micro world. We import goods and we export products or services. For an economy the size of Greece, what is the economy of the size of Greece? Is it 10 million inhabitant countries like Belgium or Portugal? This is still small, but it's in the right direction. Of course, we're not interested only in how open we are, but we are also interested in how competitive one is. Here we do not see only the trade balance, but the current account balance, which includes money flows as well. The current account balance of every country that needs to invest is under pressure because money is coming in from abroad. This could be stock exchange investment, but other foreign investments. This pressures the current account balance, but it doesn't matter. Because unless it's production, the balance will balance out in the future.
However, what we can see here is that the current balance of the country, so we can see the deviation, the divergence rather, since the accession to the Eurozone until the country's bankruptcy. In order for this to be maintainable, sustainable rather, figures should be at around 3%. Of course, it seems that we diverged from this. The question here is, which was partly technocratic and partly socio-political, was to what extent this can be amended or corrected rather, or whether the country had to go bankrupt outside the Eurozone and then restart. It was a tough question because it had to do with whether the country had the institutional background to vote for governments that would legislate decreases in 40% decreases in pensions. And you might ask, what's the relation between pensions and the balance? Well, they are related because you have income and revenues. A large part is consumption that is exported, goes abroad. So the current balance was corrected, repaired very fast. Partly this had to do with an increase in exports. The favorable competition also helped, but there was a severe decrease in imports. Some sustainable, some not. What was not sustainable? Well, most households did not change their cars or their home appliances for 10 years. They did not have any renovations done at home. Of course, this changed at some point, and we see this now. But at any rate, the current balance reached practically zero and remained very nice. It was destabilized with the COVID pandemic. For 2.5 years, for almost 2 years, we lost our tourism. So all the foreign currency imported abroad by tourists was lost. And pressures went on, because this is at current prices, this went on with the invasion into Ukraine, which caused an increase in the energy prices, and because our country imports mostly industry, the problem was intensified. Now, what is worrying, and this is almost this have reached, have finished, but the balance is still not good and will be reflecting, or probably the mirror of the country's performance if in 2025 this or 2026 this is improved. It won't be easy because, as I said, we need the inflow of capital. So we will have to export more. Now, I don't need to say much here regarding inflation. It was a shock. It has been a shock, but I want to say two things. First, the inflation rate that caused increase, or rather drove the nominal interest rates, not the actual interest rates for businesses, came after a time when it was close to zero in our country. Between 2012 and 2020, I think, the inflation rate was almost zero. It was +1 or -1, so zero, in fact. And a lot of things got cheaper. The average value of our home dropped by 45%, and same happened to rents. Now, what calls for attention now is that the inflation rate that we currently have, which is stabilized at approximately 3%, 2.5 to 3%, is a bit higher than the EU average, which is just below 2.5. One might say, for God's sake, what's the difference between 2.5 and 3? Well, 2.5 and 3 are totally different. If you see the loss of competitiveness that has been caused between Greece and the Europe area in good times, when we acceded to the euro area, if you accumulate this or aggregate this over years, it means that Greek products in 10 years will be 10 times more expensive than Portuguese or Spanish products, so nobody will buy them. So decrease in inflation rate, apart from the fact that it's something that is socially very important for poor households, it's also very important for the competitiveness of the economy. Of course, to decrease the inflation rate now, the cost of energy, at least for the time being, we don't know what will happen tomorrow, which is going to be a new day, has been decreased, has to do with the possibility to have new production, because for the foreign investments that came to our country, acquired old production facilities from competition. They did not build their own. This is the good news about unemployment rate, which has been decreased from almost 30% down to unprecedented, really, for an economy like ours, down to 10%. It will not decrease much further. And one reason this will be the case is that even in good times, we had an unemployment rate of around 10%. There is an issue of what these unemployed people mean to. Well, it's an issue of participation in the labor. Now that things are becoming tighter, even for the wrong reasons, we're thinking of the fact that the way that the people participate in the labor market and are paid for the labor, like huge groups of the population, like women and young people, is a distorted phenomenon, and this is good news, because if we consider it, we might fix it. Now, opening the black box of labor, to correlate it with what we saw in the presentation. Of course, it's important to work, but in order to have higher income and for these to make up, to adapt to a higher GDP, we'll have to work to high added value business activities. High added value means something that offers something concerning culture, history, or might be a very specialized software or a very specialized product. Now, if we measure, Eurostat classifies sectors into knowledge-intensive and technology-intensive, and we see that we lag behind in these two categories. We will not achieve a major and shifting from one job to another, and with the substitution of some jobs by technology, this will be achieved. A few more thoughts. First of all, financing. Greek businesses were cut off financing for many, many years since the beginning of the financial crisis. Here, we're after the crisis. We see various things. First of all, the first thing we see is the average borrowing cost in the country to the private sector. If you know at what rate new loans are granted, it's not this. This is the average cost. It includes loans that were granted 4 years ago. So the average interest rate in the country seems to range at around 6%. It has increased following the increase in the central bank's interest rates. And we're interested in two things, the cost of refinancing. So if I'm somebody who got a mortgage loan, I need to know how much this will increase. But we'll also increase, from now onward, the difference between the nominal interest rate and inflation rate, the actual interest rate and the inflation rate. What is hopeful in this case, reflecting the good news about the Greek economy, is the fact that the spread, be it measured in terms of the EU average, euro area average, or we build it here using a basket, including Portugal, Cyprus, Italy, and Spain. This is the basket. We see that this spread has been declining. So the national markets are willing in the private sector to pledge for Greece. So we're not cut off financing anymore, cut off from financing. The same is true for the cost of financing of the Greek state, the sovereign borrowing, and this we see this in state bonds, sovereign bonds. Here, the spread compared to Germany, of course, it does exist, but the spread with the countries of the south is very, very narrow, very small. And we see that the performance, the yield of the bonds has been declining. Now, for those who are involved in business financing, either from the banking sector, so business financing, one of the interesting things, very hot, is the NPEs. Here you can see the amount of loans. This is in billion euros. In 2015, these were loans owned by the banks and the portfolios of the banks. Their majority has now been transferred from banks. However, it is within the Greek economy. They are within the Greek economy. They are there. Not all of them. Some of them have been settled or worked out. It would be nice if this bar was that low, rather than what it is now, what it currently is. Another question is what will happen in the Greek economy depending on how fast this problem will be resolved. By the way, in the past 6 months, we see an increase in the NPEs within the banks. not a vast one, but worth mentioning. Another thing that one can notice, and actually, this was the finding of a study that we published a couple of months ago with the support of the Central Bank of Greece, is to look at the zombie business companies, the ones that they have been that don't have enough money to service their loans, and we ran various tests to indicate that at the industry and economy levels, which are interrelated, these two are irrelated. And another thing that one might see on our webpage and the webpage of the Bank of Greece, here we can see all in all how these businesses, the zombie companies, have been doing. Most interesting thing here, and I can't show you unfortunately because there's a statistical analysis underneath this. I identified how the density of these companies per industries, per sectors, affects the overall operation of the sector. And it seems that in sectors where you have such zombie companies, and one might say that it's doubtful if they should or could remain alive, they tap the resources of the other businesses and the sector, driving the entire sector downwards. If one believes this, then this means that there should be a policy of faster resolution of this problem. Perhaps this is below the underlying problem of the banks when you ask them, why don't you grant more loans? And they say, okay, whom should we grant loans to? Now, there are various issues in the national environment. One might talk about the uncertainties. For us, there's a mixed picture. The Greek economy went through one of the most weird and profound crises of the last many decades. It hasn't come out unharmed, totally unharmed, but it has exited this. We've lost people, we've lost investments. Institutionally, the country withstood this, was resilient to this test, but it seems, if I may say so, that there is a double lack of ambition to run faster and capability to run faster, because capabilities are dependent on previous investments, on people who are missing because of the brain drain. So a plan that could be at a business level or economy level or at a broader level that could support what I said earlier, and which should be perhaps, no matter how boring or technocratic this might sound, might be a national target for our economy to run systematically at a rate higher than that of the EU average, so that over the next decade we can catch up and fully catch up and never look behind us. Can this happen? Have other economies achieved this? Yes. Korea, Southern Korea, progress of which we all use, went through three very painful years in the last decade under the IMF. Poland and Romania, that have been running really fast recently, went through a lot of hardship in the 90s. Spain has achieved growth rates over the past 15 years, much higher than ours. We in the 80s, let me remind you, when we acceded to the EEC 5 years before the Spaniards and the Portuguese, and we were richer than them. But now they have got better prospects than us. When Finland, it lost its trade partner, the USSR, in 3 years, it reinvented itself and its economy. So it's doable, and we're not a heavy industry economy. We've got people in the diaspora, we've got shipping. You see me a bit worried because given the improvement rate that we've had, of course it is improvement, yes, for sure, I'm afraid that we'll be caught up by developments. And I will conclude with 3 observations regarding the international environment, but they're interesting. 3 very interesting things for me. First, consumption. In the past 3-4 years, the Western world, at least the Western world, has supported higher consumption rates, including us, than expected. One way I interpret this is that after the COVID pandemic, there was little will to defer consumption, to postpone purchases. You couldn't tell young people, don't buy this pair of shoes now, because in 10 years you might need something. We don't want to postpone consumption anymore. In the US, they spent all their savings of the COVID era last year. We are spending it all this year. We're using it up this year. So we changed the consuming patterns, but the reality is harsh. This money will be over. And the other thing is that there will be sectors with high demand and investments will be directed there. The inflation rate will drop, the actual interest rates will be high, and investments globally will go where the returns are higher. For instance, if we read the Draghi report that says we need to concentrate all our natural and human capital where we have high returns, we should be happy and also at the same time worried, because we should wonder, does Greece has investments that are amongst the most productive in Europe, or is the idea that there will be 3 German, 1 Spanish and 2 French and 2 Italian businesses that will need to be supported because they're the most productive? And the last thing is that despite what's been going on in the geopolitical arena, the international trade has not been harmed. Even the US-China trade, despite everything that we might be afraid of, is at a very high level. And this makes economies be very interconnected. So the answer to the question, what can be done for the Greek economy, is not certain. There are various answers. I tried to give you an answer, a picture rather, to paint a picture of all the critical factors for people, for everyone to draw their own conclusions, and thank you for this opportunity.
Thank you, Mr. Vetas. Always a guiding light in the trends of the economy and shows us the reality. Ladies and gentlemen, this marks the end of our conference. Thank you very much for your presence, your participation. We hope that the discussions and presentations has given you useful knowledge. And on behalf of the organizer, I'd like to thank all participants and speakers for their views, perspective, and opinions. I'd like to welcome you now to lunch, where we'll be able to discuss in a more relaxed environment. Thank you very much. Looking forward to seeing you in future events.